Yo, good morning, traders. Welcome back to Market in the Morning. I'm your host, Kevin Dubrisky. Today, we have two very special guests. We have Imre joining us in just a couple minutes here, and we have a special secret surprise guest joining us around 9:30, and we'll announce that when they join. So I hope you guys are excited. Market in the Morning starts right now. Smash that like button if you're ready to make some money today. Yo, Imre, good morning.
Hey, good morning, Kevin. How are you doing, man?
Bro, I'm doing great. It's Wednesday. It's July 1st, first of the month. How are you doing? First of the
Eh,
quarter, too?
yeah, I know, right? I'm doing fantastic. Today is, I don't know if we're going to have any other Canadians in the crowd, but today is Canada Day, which is kind of like our 4th of July. So it's going to be a hot day here in Toronto. Looking
Cool.
forward to it.
Awesome, man. Let's jump right into it. Pull up your chart. We'll cover some high impact news, some big moving equities, headlines. What's on your plate? We got NFP tomorrow. What are you looking for today?
Yeah, so this is kind of what I was thinking heading into this week, right? It's like, all right, no news seems to be good news on the Iran front. And I,
Yeah.
I think the market is really happy to put that in the rearview mirror. So the market, it's like a hyperactive kid, hopped up on sugar. It always needs to be distracted or paying attention to something, right? So it was Iran. Now that seems to be in the rearview mirror. I mean, never say never, right? Like we don't
Yeah.
know what's gonna pop up unexpectedly, and I don't think it's the last we've heard of this story. But let's assume that we can move on from that for at least a little bit. I think where the market's going to be paying attention to now is going to be a combination of things like earnings and interest rates, right? That's kind of the classical stock market analyst or investor's main focus, earnings and rates. And as we saw not too long ago, we saw perhaps the signs of a slight hawkish pivot from the Fed. So I think now the market's going to be super focused on economic data releases. Maybe something like that NFP report that's coming up tomorrow could be something market moving, just maybe. Hint, hint, yes, it absolutely will be.
I know.
And I think that's where the focus is. I think the focus is on data to see, exactly what the Fed might be thinking, what they're telegraphing. We have a new Fed chair as well. So maybe he's trying to bluff the markets a little bit. Maybe he's not. Maybe he's underplaying his hand. Maybe he's overplaying it. We're still trying to figure all that out. And I think the best way to do that for the market, generally speaking, is to look at things like economic data releases, because that's going to point the way for how the market is going to ultimately price in the risk of more interest rate hikes or less interest rate hikes.
That's awesome. Let's pull up our economic calendar. I know we had ADP employment come out just a couple minutes ago. Let's cover that a little bit. What's your insights into ADP? Does it really make that much of an impact on what's going on in the employment, or even give us that insight?
All right. So my opinion on ADP is it's not necessarily something that I like to keep a super close eye on. It's obviously the precursor to NFP. Um, if there is a huge miss, and we're going to just click on this reading here, right? And we can see that we do have a bit of a miss here today. Would I classify it as an enormous miss? Not necessarily, but I do think that this is worth paying attention to given what the market was expecting. Now, the common sense thinking, right, is that how the ADP goes, we'll probably see something similar, a similar kind of pattern or trend with NFP. That is not always the case. And in fact, when there is a significant divergence between the two reports, that's when you get the most volatility. However, if we get a big miss in ADP and then a big miss in NFP, that can also create some follow-through volatility as well. So for today, is this going to be the biggest piece of market in terms of market moving news? And in terms of what's on the calendar, probably. Is this the report that I'm going to be super hyped up about trading today? Also not necessarily.
Okay, so with these reports coming out today, obviously not much. I think we also have, what was it, ISM manufacturing?
Yeah, we've got ISM manufacturing. I mean, look, guys, the thing with these types of reports is you have to understand at what points of the economic and monetary cycle that we're going to care about these things a little bit more versus a little bit less. ISM manufacturing is going to be a little bit interesting. The thing with ISM manufacturing is that what we're going to be seeing, right, is the historical trends as well. So you can see that in terms of the historical data. We saw a big jump, right, in June. We're going to see what's going to happen so far, but the trend has been, at least for most of 2026, we've seen big jumps in this report. And if I'm just going to filter this to the stock market screener here, we can see that, if the report comes in very hot, that is going to be forecast to be bearish for the market. Has that been the case? I mean, has the market not been hitting, new all-time highs in the face of challenging news? Yes, and it has been. That does mean we're not going to get a reaction on the day from a day trading perspective, but from a bigger picture macro perspective, I just don't see this as being the market leading report. Does it play a role in terms of inflation and inflationary pressures downstream? 100% yes. So context is really, really important. And being able to place these reports within the context of what the market is caring about is an important lens to have. So from a day trading perspective, yes, we can take a look at this today. It could have an impact. But I think NFP is really going to be the headline event this week.
That's awesome. So with NFP being tomorrow and obviously today's Wednesday, are you expecting range? Are we expecting a pretty boring day in terms of general direction of the market?
I've been saying this on X. The market has been blessedly extremely clear from a technical perspective, so far. And looking at the S&P 500 right now, cash index, you can see we've been trading in this range for quite some time. And we're going to bring up a friend of ours, the volume profile, in just a moment.
Our good
And
buddy.
what we're going to see is where the fair value in this range has been, right? And what we can see is that the fair value has been, I'd say, roughly between 73.88 all the way up to just below 7,600, right around 7,600. And you can see that most recently, when we tested the bottom of what the market has considered the extreme of fair value, an extreme discount, the market's been willing to buy it up. So in a range-bound market, the statistics overwhelmingly say that when we test one extreme of value, we're going to start migrating towards the other extreme of value. And that other extreme of value is quite a bit higher from here. So I think this has been a very easy market to trade this week. I rarely say that. I think usually markets are fairly challenging, but when we have a clear rejection of a value area extreme, the trading bias for me is extremely clear. I want to be playing the long side. That doesn't mean that there won't be pullbacks, doesn't mean there won't be sell-offs along the way, but I see those as ultimately dip buying opportunities.
That's awesome. So somebody asked in the chat, I think we just covered this. Is ISM a market mover? And like you mentioned, not every session, depending on the context of the economy, that will tell you which reports to be looking at. So what are your thoughts on ISM being a market mover today?
Today, I mean, there's just not a lot going on. Do I think we'll get a reaction from it? Yeah, I do. And if we do get a hotter than expected report and we get a brief little pullback in the market, I'll be looking for reasons to buy that pullback.
Okay.
Yeah.
Awesome.
Now, in other markets, right? Like if we're taking a look at gold, we've been playing around with my key support level, or my zone between 58 and 62 on 3,900. Below that, I would start reevaluating what I'm looking at here in gold. I think everybody and their mother has been bearish on gold for so long now, with good reason. There were technical and fundamental reasons to be. I think the trade is done. I don't think there's a lot more downside to go. So I'm looking more for reasons to be constructive on gold. And I see a lot of Twitter analysis, and I'm not saying like from retail. I'm seeing like legitimate seasoned macro analysts explaining why gold has lower to go because the dollar is going to be strong, et cetera, et cetera. And with all of these things, like man, when there's so much consensus and the trade gets too crowded, I start becoming a little bit of a contrarian. Now, I'm just going to put this out there. I tend to be usually right on big picture ideas. I also tend to be a little bit early, right? So I might be a little bit early on the gold idea here, but so long as 58 holds, I'll be looking for reasons to buy gold. And for me, this is a much longer term trade.
Yeah. Yeah, like buying gold down here. You mean like sort of a buy and hold opportunity?
Yeah, I'm not saying necessarily from an investment perspective, and this is where options trading really shines. I don't know how many people we have that trade options in the chat, but don't sleep on options, guys. It's a fantastic way to get longer term exposure to the market if you know what you're doing. Why is that? It's because you're buying yourself time with an option. You can think of it that way, or you could be selling time. But if I'm trading the spot market, my risk is going to be open, especially if I'm trading on margin. Whereas if I'm buying an option, my risk is completely defined. If I buy an option for $10,000, and that's my entire risk on the trade, I cannot lose more than $10,000. Now you might say to yourself, okay, I've got to stop at 10 grand or 2 grand or whatever your risk limit is. Sure, when you're trading on margin, your stop is one thing. The margin requirements that continuously fluctuate is another, right? So it's just different ways of playing different kinds of ideas. But whenever I'm looking for a significant structural shift in an asset, that's where I want to leverage options as much as possible.
That's awesome. So are you positioning it? Of course, you don't have to answer, and everybody, not financial advice. Always got to say it. Are you looking to start positioning into gold anytime soon yourself?
Yeah, I've already started to. Now, again, what have I said before? When I'm looking at trading gold, I'm not typically trading I'm not typically trading the futures market. I'm looking at stocks. So I'm looking at gold mining stocks. This is the gold mining stock ETF, or one of them, GDX. There's also the junior gold mining ETF, but I'm looking at some of the more promising names within this overall index fund, and I'm looking for where those names are going to outperform relative to some of the lagging names in the index as well. Right. So that's my typical preference in terms of how I want to play certain commodity related ideas I have. Crude oil, energy is another example. I'll typically not express the idea through crude oil futures themselves. I'll be looking at, names within an ETF like XLE, for instance.
Beautiful. Awesome. We just had a headline come in there. If you don't mind pulling up market, we have.
Yeah, let's take a look, man. What do we got? What do we got? Something.
What do you think we
big?
got? What have we been hearing every few hours for the past 3 months? Trump says Iran meeting is very good and the relations are going very well.
That doesn't mean anything.
Exactly, which means in a couple hours we're going to get a headline that says the complete opposite.
Yeah. Now, guys, here's something with this. I don't want to make it sound like I'm a hater, but it is. This thing is so weird. I've never seen anything like this. There is no reality. There's no alternative dimension where this is a win for the US. This is like the ultimate humiliation. And in many ways, to me, this is like on par with a Vietnam level humiliation for the country. But yeah, it's insane. Oh, you know what? You just saw this other thing on Trump's financial disclosures. You know how much money Trump made last year? You see that?
Bro, I saw that. They reported, was it $683 million from his crypto coins?
Right. And I think his net, or I don't know if it was net or gross, but his overall earnings were reported to be over 2 billion.
Wow.
$2 billion.
What do you mean? Doesn't every president do that?
Okay, so all right. I got to be careful about what I say here, because there is some information I have, and I can't be extremely open about all of it, but I will say this. Other presidents have had whether you want to call it the decency or the humility or whatever, other presidents have gone on to make an incredible eye-watering amount of money. They just do it after they leave the presidency. You know, Trump is just
Eager.
doing it while he's in the seat, man,
He's
and
eager
that's
beaver.
in some ways, like I can respect that. In other ways, like again, is it a national security concern to an extent? Maybe, I don't know. Whatever. It's not going to change. He's not going to change. So it's interesting. So here's one thing I will say: do not bet against Trump. Why
No,
would you
that's
bet
for
against the
sure.
president, right? Like, I mean, if he's positioning himself into something, I'm going to look for reasons to get in on the same idea.
Yeah. Yep. He says buy a Dell. Guess what we're
Yeah.
doing?
Dell, Intel, I mean, those are all been crazy, crazy moves.
Yeah, Intel was absolutely nuts. $20 to like I think it's at 120 right
Yeah.
now. What's up, Piyush? Asking Imre, what are your thoughts on seeing yen at record low prices as an institutional trader? Do you think long-term buying makes sense? Just your perspective.
So, you know, investing in a currency itself never really makes sense. The reason, so whenever here's the reason that the yen trade works so well, and I'm not talking about trading a currency pair. This is far more of an institutional commercial perspective. What I would do if I was a multinational corporation, or if I was interested in doing business across many different geographies, what I would want to do is I would want to borrow money in a currency where the interest rate is the absolute lowest, right? So I wouldn't want to, let's say I want to develop, I'm just making this up, develop real estate in Brazil or in Colombia where the interest rates are relatively high. I would not want to take out that multi-billion-dollar loan in Colombian pesos or Brazilian reals. Like I would want to fund my investment with a currency that is as cheap as possible. You know, and in terms of major currencies, that would be the yen. That would be the yen. So I'm going to borrow as much as I can in the yen, and then I'm going to use that investment, that investment that I'm making and develop it in somewhere else where I can actually get a much higher return on that investment. Now, in terms of the currency itself, like this is an idea I've been so early on. I've been at least 6 months early on it. I think, and this is a bold prediction, right? I rarely make these. I very rarely will make a bold
Buckle up.
prediction. My bold prediction is that the yen tsunami, which is when the yen is going to surge and surge and surge and surge in strength, is going to be the death blow to the global financial economy. And that is going to be one of, not the, but one of the key triggers for the next global depression. That's just my personal opinion. You know, it is a hard prediction I'm making. It's a very hard trade to position yourself into right now. You know, like I can't take a position on that idea right now. There's no way for me to do so. I really would have to. I would need billions of dollars in available capital to play that idea effectively, and personally, I don't have that. So, but you know, that is my big currency ideas. I think the yen is going to absolutely storm the market. Timing obviously is the very difficult part of that. The reason for that trade, obviously, other than the fact that what goes up must come down and vice versa, but things can go up for a long time, right? I mean, you look at the Turkish lira. That currency's been under pressure for a tremendous amount of time. Look at the Indian stock market. That thing's been unstoppable. So, you know, financial markets, inertia is a real thing. That said, here's the thing with the yen. So many countries have borrowed in yen, and if the interest rate on those loans starts to spike, and the BOJ is very aware of this. That's why they're soft intervening, because if they really start hiking rates hard and fast and start signaling to the market that that's what they have to do, you break the global economy. Like, and obviously Japan doesn't want to do that. So why would that happen? It's if they're forced to do so. What would force them to do that? Well, what would force them to do that would be crazy inflationary pressure. What could cause crazy inflationary pressure? Maybe it would be a surprise energy shock. Maybe it would be a surprise commodity boom. You know, is that on my radar? in terms of super big picture ideas, absolutely 100% yes.
Awesome. We got some more questions in the chat. Let's see, where do we start, man? Why is gold, dollar, and USD weird?
Love it. Kevin, you want to take a stab at that one, man? That is one of my favorite macro questions.
Nah, man, this is your wheelhouse, bro. If it's your favorite,
all right,
break this down.
All right. Okay, so the dollar is an interesting animal, okay? And as the reserve currency of the world, everything is priced in dollars. Global trade is typically priced in dollars. So whether it's crude oil, whether it's gold, whether it's copper, whether it's lean hog futures, all these commodities are priced in good old greenbacks. So what does that mean? Like, why can the dollar go up, but gold also catch a bit of a bid? And the reason is that if there are other drivers, right? It's not a one-for-one correlation. It's not that if the dollar index drops by 10 basis points, gold drops a commensurate amount. It's not a one-to-one correlation. So when you see both happen at the same time, and you know what, we're gonna overlay this, man.
Here we go.
Let's get some data on the books instead of just
Guys, make sure you run that like button up, man. Every Wednesday, we have Imre here with us breaking down these economics, really giving us some strong insight and input from an institutional level standpoint and perspective.
So here we've got like gold and the dollar index overlaid. And what we can typically see is what kind of correlation would you say we have? Would you say that the correlation is positive or negative? I know it's a little bit hard to see on the price scale here, but I'm trying to overlay it as closely as possible. And what we can see is that actually sometimes gold and the dollar diverge, right? They diverge. For example, when the dollar rallied like crazy, 2015, 2016, what do we see? Oil declined. In 2022, when we had an insane rally in the dollar, what did gold do? Gold declined. But there will be periods of time when the two markets are more correlated than not. What does that tell you about the state of the global economy? What does it say? It says that there's demand for dollars, which is the ultimate safe haven in many ways, because the dollar is ultimately what? Backed by bonds, which are backed by the promise of the US government, which apparently is still the most trustworthy government in the world. So, but what else is gold? Gold is also a bit of a safe haven, right? People think of gold as an inflationary hedge. It's technically not, in my opinion. It's not about hedging against inflation necessarily, but gold is something that will attract investor and trader interest also during times of economic uncertainty. Now, when you see demand for both, to me, what that signals from a safe haven perspective is that you have traders kind of hedging their bets a little bit. If the US goes down the tubes economically, at least we've got gold. And US economy still seems strong. There's still demand for US securities and equities. I'm going to still invest in the US. So when both go up at the same time, it's a very interesting trigger, and it's not sustainable long term. Eventually, one of those things is going to break. Given the incredible rally that we've recently had in the dollar index, given the incredible sell-off that we've had in gold, I would wager on a pure mean reversion basis that it's the dollar that's going to pull back before gold does, and we're going to get a larger move down in the dollar and a bigger move up in gold. But they can remain positively correlated for a little bit longer. Now let's go on to the other picture of yields. Okay, so if yields are going up, what does that mean? It means that the entire world is effectively raising the interest rate for America's debt repayments. That's a great and simple way to understand the 10-year yield. The 10-year yield is the global economy having a vote on what America's interest rate is for debt repayment. So if rates are going up because yields are going up, what does that mean? Well, what that means is that bonds are going down, right? So if bonds are going down and yields are going up, well, wouldn't that mean flows out of the dollar? Not necessarily, because again, where can that US investment be going into if it's not bonds? Well, maybe it's a little thing called the stock market.
Hmm.
Right? So I think that's what we're seeing right now. On a day-to-day basis, you can see these slight breaks in what you would expect a typical correlation to be. However, over the long term, look, there have been periods of time where markets have rallied and bonds have gone up at the same time. There have been periods of time where they've diverged. So it's not about necessarily looking at a historical pattern and always thinking yields up, dollar up, bonds down, stocks down, or whatever. It's not necessarily about that. It's about understanding what's actually driving the market in the current macroeconomic regime. And I think what's driving the regime right now is, okay, we've just put a potential energy crisis in the rearview mirror. Again, my big crystal ball prediction is that energy crisis is going to rear its head again. Probably, early on that one as well. And I think the market is now hyper-focused on inflation and focused on the monetary policies that are going to shape what that inflationary pressure can or can't look like over time. Because the Fed really has only a couple tools at their disposal, right? The main levers they have to pull are to print more money and to adjust how easy or difficult it is to access credit through interest rates.
Awesome. So in terms of an energy crisis, are you talking like XLE energy prices start going through the roof? What are your thoughts on that? What do you mean by that? Do you mind breaking that down a bit further?
Yeah, so we've talked about this a couple times here in Market in the Morning, and I'm staying true to this. There is only so much that easing a geopolitical crisis can actually do. With the impact that's taken place on the Strait of Hormuz, which in turn has impacted oil production and the movement of energy products around the world, well, that's a lot of that production and supply has simply had to go offline. And here's an unfortunate reality when it comes to energy fields. A lot of people would think that, oh, you just, you turn the tap off, you just turn it back on and the oil starts flowing again. No, a lot of energy fields and production fields are not designed to be shut off. The Saudis, I believe, have designed theirs, but a lot of the other Gulf states have not. And it takes months once you stop production to start it back up again. The reason we've weathered this storm from an energy crisis perspective is because we have drawn down our fuel reserves around the world. So we've completely eliminated our fuel reserves around the world to help buffer against this geopolitical crisis in the Middle East. We have no more fuel reserves. And we have a production crisis where we're not going to be able to replenish those reserves anytime soon. So I hate saying this, but fundamentally, I don't see a way out of this energy crisis. I think it's coming. Again, I'm probably a little bit early with my timelines here, but I think it's coming in about a month. I think in about a month's time, we're going to start seeing oil in the news in a major way again. So it doesn't mean we can't go lower, right? I still have a final downside target, closing the not the closing gap to the opening gap, but from the high there in February, week of February 23rd. It's at 67.83. So have a final downside target. We're almost there. Below that, I'm not really interested in shorting crude further. Could we go down to the 60s, the 50s? I'd be surprised. Doesn't mean it can't happen, but I'm just saying I'd be surprised a little bit. Will I change my tune if we start building value below $67 and I see clear short-term setups to trade lower? Yeah, I'll change my tune, but I still don't think that's going to change the fact we have an energy crisis brewing.
Cool. Do you mind? Let's cover some gold. Let's give the traders some levels to look for today.
Yeah, all right, let's do it. You know what? Let's pull up.
Guys, what are you looking to trade today? Are you looking at NASDAQ, S&P 500, gold? Are you trading SpaceX? What are you guys trading? Here we go. Look at that. Yeah, I'm with you, man. Gold 30% off of its all-time highs, major pullback area. A lot of people now, I always like to sort of try to view things in that retail perspective of, okay, when's retail starting to be bearish on gold? And at this point, I feel like almost everybody is saying, okay, we're short on gold, we're bearish on gold. And markets love flipping when that's the case.
So one thing, right, when I completely agree with you, that's why commitment of trader reports is very important to keep an eye on as well, right? Because it gives you the positioning disparity between smart money and absolutely stupid money. So one of the things that I like to look for when a market is pulling back, filling and backing, is where has previous value been agreed upon, right? So there's a couple things that a market can do. One, we can pull back to, you see here this very swift drop that we had in gold. Just use this as a case study. When that happens, buyers got absolutely annihilated. They didn't stand a chance in this drop here, right? So when the market's pulling back, where do we get a pullback to? It looks like it's just a void in the price action here, but it's not. What we have here is actually an area where we had previously agreed on value. And that's where the market pulled back to. And now we can see this phenomenon happen over and over and over again. It's going to be at varying degrees of value, right? That's always going to be the major question. For instance, here, where do we pull back to? We pulled back to where we agreed on value. How do I define on where we agreed on value? It's where we have a clearly defined range. Buyers and sellers temporarily agreeing on fair value. Now, here, what happened? We got a pullback towards the very edge. I wouldn't even call this the edge of value. I'd say this is a very impulsive sell-off here, where sellers just said, nope, this is a very premium price for us. We believe the market should still be priced lower. So now, where do we find a buying response? We found a buying response where we had previously agreed on value. And now we have a bit of a stalemate, don't we? We have a bit of a stalemate because if we take a look at what's going on, gold right now, we have what? Buyers and sellers agreeing on fair value. So when buyers and sellers agree on fair value, there is going to be a fair value range, which is where 70% of the total transacting has taken place within a certain range. And this is where looking at price action alone, I think, lets you down a little bit, because if I was using price action alone, what I'd be doing would be, looking at the lows here and then maybe the highs here and saying that's my range.
Yep.
Okay. But, if I'm actually looking at all of this, we can see that the real quote unquote fair value of the range is a little bit tighter. And we can see that attempts significantly above 40.41 have been stuffed, and attempts below 39.70 have been stuffed. So what am I looking for when we have a range? I want to see whether or not we're going to get those failures above the value area high and below the value area low. Now notice how this concept is fractal. In the S&P, we were talking about that exact same thing, reclaiming the value area low and then seeing a rotation back towards the value area high, which is, in my opinion, again, I don't want to make it sound like it's easy, but that is one of my slam dunk setups. Like I see that, I want to pull the trigger on that all day long. Okay, so now it's also important to keep in mind how much time we've spent above or below value, because that shows you how aggressive buyers and sellers want to be in terms of defending these areas. So notice how we spent a little bit more time above the value area high here, whereas every time we've spiked down below the value area low, buyers have quickly mounted a response. So just based on, and this is objective, this is not a prediction, I don't have to guess, I don't have to read between the lines. Objectively, we can see there is more buying interest in this range than there is selling interest. So there would have to be something that changes the picture from a fundamental perspective. Maybe it's a news release at 10 a.m. Maybe it's the ISM manufacturing, right? That will force buyers and sellers to reposition and reconsider how they value this market. So for me, this is the, what is that SMC term that is
the
semi-institutional, the dealing range. This is kind of the dealing range I'd be looking for the day, right? There is a clear value area low. There's a clear value area high. I'm looking for failures above the value area high. Maybe we, sweep this high and then break back below it. Maybe we sweep this low or this low, then reclaim it, right? So I have to pair these important levels with some kind of trade trigger in order to get involved with the market, in order to pull the trigger, right? So whatever that price action trigger is for you, it almost doesn't matter. I don't care if it's a fair value gap. I don't care if it's a moving average crossover. It doesn't matter.
Well, if it's a moving average crossover, you're probably going to join the party a little too late.
Yeah, but what is the pro versus the con? The pro is that you get a clearly confirmed signal of momentum. Now, getting a clearly confirmed signal of past momentum is not a guarantee of future momentum. So for me, moving averages do have a purpose. They do have value. The signal tends to be late, but there's also value in a late signal. Maybe you want to fade that late signal as well, right? So for instance, one of the simplest algorithmic strategies we used to run at my old fund was fading moving average crossovers. So whenever there was a moving average crossover, we would actually fade it and go the opposite direction algorithmically. Obviously, it wasn't that simple. There was a bunch of other quantitative metrics we were layering on top of that, but that was the fundamental premise. So, okay, anyway, however, we start doing what? Building value above a value area extreme. Notice how here we didn't build value. The market just went up. We did not get a clear range. We did not get a clear range like this. If we start getting a clear range, that tells me that value, where buyers and sellers have agreed on fair pricing, that value is starting to migrate directionally. Okay. So it's not about, to me, making a prediction. It's about having a key level, area of interest, whatever you want to call it, zone, and then you want to determine what type of behavior is possible at that zone. Because there's only a couple of things that can happen. We're either going to get spike up and a rejection. We're going to get consolidation, a sweep of the lows, and then continuation. We're going to get a move up to these highs here, take that out and reverse. We're going to get a move through those highs, consolidate. You see what I mean? There are some possibilities, but there's a limited number of them. So as a trader, your job is to visualize and imagine all the possibilities and then come up with a specific trading playbook for the possibilities that you are willing to trade. For example, I'm not willing to really long gold if we get this. I'm not willing to buy a breakout above that high. That's not part of my playbook. You know, where I would be willing to buy gold would be if we can establish value here, we try to break back inside value, which is the value area here. We can't, and we start trading higher again. That would be a setup for me where I'm looking for value to migrate upwards.
Awesome. Awesome.
I like the fade, obviously.
Yep. Yeah, I like that breakdown. I like what you mentioned too about when moving averages cross over, because I think what happened with gold too is it just had its death cross, the 50 and the 200.
Yep.
So, you know, could be that setup, possibly. We'll see. We'll see.
To me, that's actually more of a bullish indication than.
That's what I'm saying. That's what I'm saying. Like, this is that opportunity. This is that, okay, it has the death cross. News headlines cover it. Retail thinks gold is going to the floor. And then, of course, that's when gold starts to turn around.
Yes.
Beautiful. Because even if gold does rally from here, that death cross, that moving average crossover, it's not going to cross right back up again. It's going to take time to move back to that average.
Yeah, I completely agree, right? So I've said this before as well. I think some of the sell-off on this market has been driven technically, right? Where you see momentum, algorithmic momentum funds starting to get increasingly short. That's stopping people out. It's forcing market makers to trade directionally. Like, I think there is a lot of that technical momentum as well, you know, but yes, I think mean reversion is obviously a real thing too.
Yep. Awesome. We had a question here. Imre, I want to ask you about your habits outside of trading that have indirectly supported your trading in a positive way. I like that question.
Yeah, that's a great question. I'm a big believer. Look, this is not a universal truth. It's just my life experience. A lot of the best traders that I've ever worked with or spoken to have some kind of athletic background. whether it was college competitive, whether it was amateur, but you know, like Olympic level amateur, whether it was professional. Oh, I would say overwhelmingly over 80% of the best traders that I ever worked with had some kind of either athletic background or are weekend warriors, in their older age or middle age, for example. A lot of people don't know this, but my trading partner, Andy Krieger, he's 73 and he's still extremely active. He used to actually be a professional tennis player. He didn't make it to like the ATP finals or anything like that, but he played on the European circuit. I represented the Canadian national team, a couple of different sports. I still take athletics extremely seriously today. And the reason that I see that overlap between athletics and trading, you'll think that it's the discipline, which yes, there is some of that. But for me, it's I see trading as no different than a high performance sporting event or endeavor, right? So I think of myself as a performance athlete when I'm trading. So one of the things that I learned early on that separates a great performance from an average performance is the 360-degree perspective you take on yourself. So that's not just being good at the craft, it's on prioritizing recovery, it's on prioritizing nutrition, prioritizing sleep. And I'm not saying I nail the sleep side consistently, because that's probably the biggest hole in my game. I struggle with sleep, but my nutrition is 100% on point.
Right.
I move my body every single day. And that allows me to put myself in a mental and emotional state that's going to be, I think, super conducive for trading more often than not. So I'm very data driven. I try to track a lot of different things, but also just more qualitatively, I try to think, am I putting myself in the position to trade well? Am I recovering correctly? Am I eating the right things? Am I making decisions that are going to allow me enough preparation time in the morning to be ready for the market? And I take a lot of those things seriously. When I see, and I understand it's the reality for a lot of people, when I see a lot of people saying, oh, I have to trade in between meetings at work, or I've got a quick few minutes on my phone at my lunch break. Look, I'm not trying to shatter anyone's dream, but you're competing against people like me. You're trading on your phone on your lunch break. Like
That's a good point.
I'm gonna take your money. I'm going to take your money, and if it's not me, somebody else is.
Yep.
So you have to think like trading is the only arena in the world where it's not skill-based matchmaking. You're competing against the absolute best in the world. Like if I go play a pickup basketball game, I'm not going to be playing against Kevin Durant and LeBron James. I'm going to be playing against average Joes. So it's trading's different. So you have to do everything you can to give yourself every possible advantage.
Yeah, that's awesome, guys. Don't forget, Imre, you're going to be hosting our NFP webinar tomorrow, right?
Yeah, we've got NFP tomorrow. I'm really excited about that one. And Market makes it so easy. I hate using that word. Market makes it so simple to trade these economic news releases. Obviously we've got ISM coming up at 10 a.m. And we're going to be looking at the NFP stuff tomorrow. So I'll leave that. But when I pull up the ISM PMI stuff, like we have the playbook. If I want to trade gold. Let's see, what is it? Would it be XAU, USD? Yeah, there we go. So if I pull up gold, right? We know immediately where the range is that we don't want to take a position, and we also know at what readings we want to start getting interested in terms of taking a directional view on the market. So this min-max reading is so helpful, and with prediction market data, we also have a reasonable probability in terms of how that data is going to come out. And then we can also look at the historical data as well. So at a very quick glance, we have all these different powerful ways of understanding, what type of positioning is most likely going to lead to a successful outcome.
Awesome. Somebody said, sir, are you working in hedge funds? Are you still working in a hedge fund?
Yes, but I've been phasing, I've been slowly phasing myself out. So my professional trading history spans two very different kinds of trading at an institutional level. I've traded on a very cutthroat, I say cutthroat. I don't mean that the traders were trying to kill each other, but we were a very aggressive, small, nimble prop trading operation. Real money, physical trading desks, actually trading on the trading floor next to other traders, and that was my professional foundation. From there, I moved into the hedge fund side of the industry. Completely different type of trading, completely different objectives. When you're trading prop, the goal is simple. It's simple. It's to make as much money as you possibly can. With hedge funds, there are so many different types of hedge funds. There are hedge funds that are called absolute return, where all they're looking for is again a max gain. But there's also this very important metric, which is how we qualify our returns at a fund, which is risk-adjusted returns. In other words, for how much money we make, how much risk do we take relative to the money that we're making, and it's a completely different metric. I mean, a personal trader at home who's trading with, let's say, a $5,000 personal account, if they made 20% on the year, it's not really going to move the needle. At my fund, I'm telling you, if I told our investors, hey, you made 20% this year, they would be freaking thrilled. They would be over the moon. Because why? They're going to double their money every 3.5 years-ish, if we're compounding at 20% per annum. And when we're talking about ultra high net worth people with hundreds of millions or billions of dollars in investable assets or family offices, that is an insane return. The other thing too is it's not like where the term comes from necessarily, but when you think of the word hedge, it means what? You're hedging risk somewhere else. So this was the latest fund that I've been helping run, is that we would hedge people's risk asset exposure. So our target investor was somebody who had a lot of exposure to things like this broader stock market, and we're there to help buffer them if the market crashes. So then if they've got $10 billion to invest, they're not going to give us 10 billion. They're going to give us a small percentage of that, and they're going to keep the rest in the broader market, and we're kind of their insurance policy. Right. So there's so many different types of hedge funds, and so many different ways of understanding and looking at the market through that lens.
Beautiful. Great. Do you want to show any levels, share any trade ideas that you might possibly be looking at today? Guys, great questions in the comments. Definitely keep them coming.
So we've got like that one volatility event at 10, right? So that's what I'd be waiting for, that data release to kind of help drive a pop in market action here. So look, gold, very simple. I'm looking for what we're seeing above 40.41. I'd love to perhaps see a push and failure above the swing high. What is that on a 4-hour chart? Whether we get that or not, I don't know. We'll have to see what the data presents. But a failure above 40.63, very interesting to me. So that could be an attempted push and then a very quick rejection back down. On the other hand, I'd also like to see failure below the value area low here, which is currently at 39.71 or so. So same deal. You can see this big wick right here, and the smaller wick on that candle. So if we're going to more of an intraday time frame, we can see that we tried to build value down here, right? We spiked up, spiked down, and then what happened? As we're reclaiming that value area low, we start getting that rotation back towards the opposite value area high.
Is Warsh speaking
same
now?
thing here. Same thing here at these more recent lows as well. We tried to push lower. We can't. And this is where I say, I don't care what your entry trigger is. It could be as simple as, hey, we have a very clear descending channel here. Let me buy the breakout. It could be, we've got a break, high, low, lower high, lower low, lower high, lower low, lower high, lower low, new high. Let me buy off of that. I don't care. It could be a fair value. It could be order block. It could be whatever. You could be looking at the order flow. It could be whatever it is you want it to be. Does not matter, right? So looking for those two types of trades in what has been a little bit of a range here since since June 24th. We've had a bit of a range here in gold. So awesome. I would favor statistically that range is going to continue to hold.
Beautiful. Do you mind pulling up market for a moment? We're getting some headlines coming out. It seems like Kevin Warsh is speaking right now, so we are getting some headlines on that. He's just telling us a whole lot of nothing he didn't touch up on in the FOMC meeting.
Yeah. But not giving the forward guidance is a little wild to me. I mean, I'm not upset by it on a personal note, but it is a break with tradition, right? And The question is why? Like, why would you not give forward guidance? And the only logical answer is that they have no freaking clue what's coming.
Yeah, which is always very, very settling for the markets. Market makers
Exactly.
love to hear that.
Yeah, exactly, right? So when you have, and a lot of people have built up the central bank to be this kind of mythical entity that can engineer the economy out of a recession. Um, they're not. They're definitely not. And the reason that I personally like what Warsh is saying is that uh, he's right. There is no way to know because there are so many uncertain variables floating around. And I've been saying this for a long time. What the market's been pricing in is not just a Goldilocks scenario. It is the picture perfect, absolute best case scenario humanly possible to all the various issues facing the world. And I'm an optimist, but I'm, literally we're pricing in perfection. That seems just unlikely to me.
Oh, why not? Where is, I know it's funny. I was looking for his speech right now too. It doesn't seem like it's on their normal, their Federal Reserve channel right now. Do you know where?
Yeah, I did not know he was speaking today, to be honest.
Yeah, me neither. I saw Nolab and Jeev were talking about it before, but I'm surprised. It didn't show up in the economic calendar. Really, he's talking to somebody in an alleyway right now. He doesn't know that he's being recorded.
I'm not too sure, but again, he's not saying anything that we haven't heard from the last FOMC,
Right.
right? So and it's not like Warsh is completely green at this. He was on the Fed previously, right? I think he was a
Yep.
governor. And he's got an extensive Wall Street background. He's married into a billionaire family. Like he knows what he's doing. He's well respected.
Let's see. Do you think a weak ISM PMI print may cause bullish price action as inflation may not be as concerning as initial ADP NFP was weak?
Yeah, I mean, certainly, from a short term perspective, like short term, yeah, I think we have more upside to go in the market. So, short answer is yes. If I'm looking at the overall inflationary trends here in the U.S., they clearly seem to be pointing higher, not lower. So a weak ISM reading could help. Again, though, I just don't think ISM is like the driving inflationary reader that we're paying a lot of attention to. So if I'm looking at the market here, we're suddenly pulling back a little bit right now. This is just kind of noisy to me.
Yeah.
At the moment. If
Agreed.
you look at yesterday's cash session, we had this beautiful push up, right? So we had this beautiful push up. We now backed and filled a lot of this. Now, here's the thing. Where's all the volume concentrated? It's going to be in the New York cash session, right? And then overnight, we're going to get less volume. So when we have a movement, a directional movement on less volume, there's one very important question you have to ask yourself. Was this move driven by a headline? Was there a shift in the fundamental narrative? Or is it inventory driven? What does inventory driven mean? It means that was there some profit taking? That some people unexpectedly wake up to profits. We have a shortened week. We have NFP coming up tomorrow. Maybe we don't want that risk on our books. So some of this just profit taking.
Awesome.
And if the answer is yes, and I was a big buyer here, and I took some profits here. Now the market's coming back here and nothing fundamentally has changed. Maybe I see that as a fantastic buying opportunity yet again. Okay. But context, right? Context is important. Tomorrow we have NFP. So let's see how excited, how risk-taking this market is going to be today.
Awesome, man. Awesome. Here we go. Sadiq, what's going on, brother? Good morning, everybody. Man, make sure you guys, if you haven't already, run that like button up. Imre's always dropping gems for you guys. You guys have been a phenomenal, engaging audience. Love to see the questions. He says, is this the kind of scenario where good U.S. data leads to USD bears because it may feed the Fed seeing economy is doing good, leading to rate cut expectations? Please enlighten me.
Yeah, so that's a good question, right? So since the last FOMC, I believe we've done a great job of pricing in that one rate cut that the Fed seems very optimistic on delivering, only one 25 basis point rate cut, and then they're done. Am I misremembering? I think it was one
Yeah.
25 basis point cut, right?
Yep.
Or hike. So okay, I think we priced that in. So now that it's been priced in, the question is really, okay, if that's been priced in, are we now at a buy the rumor, sell the news type of juncture? I think we're approaching that juncture for sure. Technically, been keeping an eye on this high, which I think has hemmed in a lot of this range going back to April 2025. Keeping an eye on that high. I think the risk is skewing to the downside in the dollar. I could be very wrong on that, but I find that the downside a little bit more attractive. On a pure mean reversion basis, even I think the index has got a decent percentage point or two in it as well. And again, if I'm looking at what the value area of this range looks like, it's not going to work on the index. I guess the euro would be our closest proxy to the index. So if I'm looking at euro dollar, I'm just looking at all of this range, you can see that we are below the value area low. We are below the value area low, but I'm not convinced yet that this is going to result in a very clean break, right? So here, just pulling up a little bit of price action here, we're testing this previous area. We're coming down. Do I see a little bit more downside? Yeah, I could easily see technically a little bit more downside on the euro, but I still think the risk is skewing higher in the euro, which means lower in the dollar. If I spread out the range to include, the big rally up, so we have a impulse and then we have the flag, so to speak. You can see that we're nearing that value area low on this larger profile. So a little bit of a move below in the pair, sure, 100%. I can see that, but for the intermediate term, I want to be more positioned short dollars.
Okay, awesome. Is there anything you're looking for on the S&P and NASDAQ today? I know you got to get out of here soon, so we'll make sure that we set everybody up.
Yeah, so if we pull up a session-based volume profile here in the S&P, what that's going to do is it's going to show me the cash session profile only. Okay, so these are only cash session profiles. Meaning from 9:30 to 4 p.m. Eastern time. What we can see, what I love to look at, is where are we going to open the new cash session relative to the previous day's value, right? So what I'm seeing here is the value area low, value area high, and in the next 10 minutes, we're very likely to open up somewhere in the middle of this value range. Okay, how I personally like to trade is when we're opening inside value of the previous day's cash session value area, I need to wait for a move to a value extreme. So I want to trade if we break below the value area low, then break back in. That's my long setup. If we break below the value area low, hold here, start building value, then I can look potentially for a failure to break back in and a movement lower. Where are we probably going to go back to in that case? Probably going to go back to where we had some agreement on fair value, a little bit lower down here. So that would be my short setup. If we start rocketing higher, that's where I'm a little bit stuck. That's where I'm going to be very hesitant on having a playbook. Why? Because I can see this overnight structure from here that we might want to test. So for me, to be long immediately off the open, I think that would take us right into the structure. And if we start building structure here, it again makes it very difficult for me to start looking for a trade unless we have a failure outside of the range and a break back in.
Okay.
So this would be by far my least exciting setup on the S&P for the day. By far the least exciting. The ones that I'd be most excited about would be anything like this, whether it's a failure to break back in or a failure to break lower and a reclaim. Those would be my ideal setups for the day. Again, just looking at the price action based structure, could I easily see a move here off the rip? For sure. On a very short-term basis, could I capture that using a pure momentum-based strategy? Yes. Is that the trade I'm most excited about for today? definitely not.
So what are you excited for today?
Today is a pretty chill day, man. Today is a pretty chill day. I think gold could actually have a decent trade in it. I've been trading more single name stocks recently. I think Intel's been a lot of fun, so we can see what happened with Intel yesterday is on the open. We started rocketing out of what? The previous day's value area high, right? Yep. So there, a lot of fun. Where did we end up finding some sellers? At areas where we previously agreed on value. Another stock I've been having a lot of fun with recently, this one's a little bit more expensive. Okay, so it's Broadcom. Okay, Broadcom's been a lot of fun as well. Why? Because what we've been seeing is a breakdown, and now where we've been pulling back to, and you can see in the pre-market we're gonna gap down significantly. But again, where was the phenomenal place to start positioning yourself short on the stock? Where we started previously agreeing on value, right? And this is where having longer term moving averages is also very helpful, right? So this is a 200-day moving average, which is a long-term trend filter that I like to use for stocks. Okay, so breaking and accepting below the 200-day has opened the door to some short trade setups. Now, the other thing to be looking at, which is very, very interesting, is also the financial sector. So there have been some plays here in the financial sector that I think have been really interesting also. So taking a look at JP Morgan, we've had what? Clear rejection, higher prices in the 345 area. And look at that. We sweeped this previous high, rejected below it. Some mean reversion opportunities could potentially be setting up. I haven't traded JP yet. What I'm really looking for is, you see here, we have some previous highs. I want to see whether or not we're going to find some support here, whereas a break below this area could see us target that 200-day moving average. So for me, a lot of my attention has been on the single name stocks, not necessarily futures and commodities as of recently. But yeah, I think there are some interesting plays here in some of those names that I've mentioned. I know Palantir is always a crowd favorite. I don't personally have anything of interest in Palantir right now. What I would need to see with this stock is a retest of this broken structure from the underside around 119 or so. We haven't gotten that yet.
Awesome, man. Awesome. Great breakdowns. Last question. I know you got to get out of here. It's up to you, man. I'm not kicking you out. You can stay as long as you want.
I do got to go. I need to go just at least a little bit before the open.
All right. So then, yeah, we got 5 minutes before then. What does the session volume represent, or the context behind it? And I know Seb answered it in the comments. Volume at price different from the volume by time that you normally see on the sub chart, which is on
100%. Yeah. So what a volume profile tells you is very, very simple. It tells you where prior business has been done and where it hasn't been done. So if we have a volume profile that looks like this, okay, what this means is that the market went up fast. Okay, it literally would have done something like this.
Right.
Right. So on the left is the profile, and the right is the price action that would mimic the profile. What this tells us is that a lot of business, and by business I mean buyers and sellers both transacting, happened here. So this is literally an agreement on fair value. Where there was a disagreement on fair value and where there was not a lot of two-way traffic, it was one-way traffic, was right here. Now, a lot of people will say, if the market trades into an area where we didn't do a lot of business, this is when people talk about fair value gaps, this is literally a gap in fair value. Okay, this is where that low volume area where we didn't do a lot of business, this right here is that quote unquote fair value gap. So a lot of people will say, buy the fair value gap, buy the low volume area. No, profiles are not about prediction. A profile cannot predict the market. No tool can. The only thing that the profile tells you is where business was done and where it wasn't done. You have to use your freaking brain to take it a step beyond that. So how you should use your brain to take it a step beyond that is, if these buyers that drove the market up here still think the market is higher to go, would they not want to defend a low volume area? Because if they don't defend a low volume area, the market is going to slice through that thin area volume. It's not going to take much selling interest to push it through here if buyers don't show up to defend that area. So that's why you can see a very strong reaction from a low volume area. However, if we fail to reclaim where we previously had value and we start breaking below, that is my favorite type of reversal setup, because now we will cut through that low volume area with a high degree of probability.
Yep.
Right? So it's not about prediction. It's about understanding where buyers and sellers have either done a lot of business or not done much business at all.
Awesome.
All right, I do got to get out of here. I hope you guys enjoyed this. Come to the NFP session tomorrow, ladies and gentlemen. We're going to have a lot of fun. We're going to break down exactly what we're looking for, what the playbook is going to be like, and you'll see how, using powerful terminal like market, we're going to know exactly what to be looking for, how to play these news releases, and I'm sure Kevin's going to walk you through what ISM is going to look like in a half hour as well, using the exact same tools.
Yes, sir. Yes, sir. You already know it, man. We're going to be lining up with market. Imre, thank you so much for being here today. Fantastic breakdowns. Thank you for answering everybody's questions in the chat. You are phenomenal, very smart guy, and we appreciate all you bring to the table here.
Oh, my pleasure, man. My pleasure. Hope you guys enjoyed it. I'll see you tomorrow. See you tomorrow bright and early. See you, Kevin.
There we go. Take care, bro. All right, ladies and gentlemen, market in the morning is still going. Imre is unfortunately stepping out. Our second special guest will be joining us very shortly. We have 2 minutes before the New York session opens. What I'm currently looking for right now is a rejection. Same trade setups. What I love too with Imre is we use the same volume profile analysis of, okay, are we range bound or are we trending? And the volume profile does give us that insight. So right now I'm looking for that rejection off that value area high, and that rejection off of this 75.40 level over here. No, so yeah, special guest man should be joining soon. He has the link. I'll throw him a drum roll. It's not Mooj. I know we got to get Mooj on here as well. Minute 16 left for the New York session to open. Gold had a very strong move. And if we look at the dollar was moving higher, but had a very strong turnaround right here. Here's the 5 minute. Yeah, we're gonna have Trump on, guys. He's gonna come on and say, "Now is a great time to buy," and then the markets are going to fly. Oh, yo, if you guys keep guessing, you might get it right. Yo, he should be here. I think he was in the comments before. No, not Nalab. I know Nalab is our super special guest, man. He's on like almost every other session. Absolutely love to see it. Oh, Abdullah, you got it, man. Kim Jong-un is going to be joining us in about 30 seconds here. G will be here tomorrow, guys. No, tomorrow is the NFP webinar, so I do want you guys to be there. I put the link in the description. Not in the description, but I put it in the comments. I should put it in the description as well. Rita said Biden? How'd you know? But let's get going. Markets are going to open right now in 7 seconds. I want to see a quick move up to these 75.40s and a bit of a rejection, right? We want to see those buyers get absorbed. Ladies and gentlemen, I'm going to throw up a drum roll right here for our special guest.
Hello,
Mr.
hello.
Seb, what is going on, brother? Hello.
Hello. Can everybody hear me? Can you hear
Yes,
me guys?
sir. Could you hear us all right?
Yeah, I can hear you guys very well. How's everybody doing in market in the morning? Glad to be here.
Bro, we're killing it, man. Glad to have you here, dude.
Thank you so much, guys. Thank you so much. So just getting up to date. What are we talking about, Kev?
Bro, so we were covering some gold, very range-bound markets, not really looking for much to come in today, especially with NFP and unemployment coming tomorrow. So sort of a wait-and-see approach. Definitely sit on your hands unless you see that A+ setup.
Totally. Yeah, I'm actually eyeing right now. I'm seeing gold. We are tapping the 40/50s. But if I'm being honest with you, I don't see it going that higher just yet. We might sweep the 60s and then just continue to the downside. We are in a little bit of a range right now, but it will be interesting with ISM manufacturing coming out in 29 minutes.
Awesome. So how are you positioning ahead of it? What's your take? How do you use market in the mornings?
Yeah, so market in the mornings. So what I do in the morning is usually I prep. I do have right now NASDAQ open here. It's very routine of what I do. So first, of course, we're gonna go to NASDAQ. We're gonna see the supports, the target levels. Once we do know what we're trying to look for, we're gonna see what is supporting the bias and what could flip it, of course. Very important because as traders, we need to be ready for everything that is to come. And right there, just in 30 seconds, I already understand exactly everything of what's going on with NASDAQ. So it's beautiful market. It's a beautiful terminal. And of course, it really depends on what you're trading, if you're a swing trader or a day trader, but we can get into that in a little bit, all right? Right now, I do want to focus on the ISM manufacturing. So I saw you guys were talking a lot about the ISM manufacturing PMI, but there is an important one too, which is going to be the prices paid. Why? Because this feeds Fed views on near-term inflation, which is something the Feds are actually eyeing. Now, labor market, we are going to have NFP data tomorrow actually. You're going to be hosting a market in the morning? No, we're going to have the Zoom webinar. Ooh.
That's
So
right.
yeah,
Special.
Yep, so please keep coming.
Yeah, it's going to be a special day, man. It's going to be great.
Yeah, 100%. Ember's going to be there. Chief is going to be there. So it's going to be a fun times. Good times, good opportunities to make money. Now, right now, what are you seeing are you looking at S&P 500 or NASDAQ, Kevin?
Yeah, so I'm looking at the S&P right now. I was looking for this downside move that we're getting right off the open. Unfortunately, my entry, I was looking for 75.40 and we hit it in the pre-market. Since then, we have rejected about 20 to 30 points from that level on the S&P. I'm not in it, unfortunately, and it is what it is.
It is what it is. I mean, moves like this come and goes, and if you get stressed for not getting a move, you're doing it wrong in trading because these moves repeat themselves all the time.
It's absolutely right.
I completely agree with you, Kevin. It's really looking at the same things right now. Any comments from the people? I don't. Let me pull up the stream over here. I gotta see the comments.
If you want, I could even throw the text up here on the chat. Guys, say hello to Seb. Drop some questions. Who's this dude? Looks like he's from Ecuador. Look at this guy. Nick, you're going to be our next guest on here, man. We know Nick loves to be in front of the people. What's going on, everybody?
Exactly.
Yes, Seb, are you taking any trades today? Are you looking for anything?
Yeah, so first I'm going to wait for the ISM manufacturing PMI to come out, wait for the noise and dust to settle because it's going to be short term regardless. Once that happens, I would be looking to either continue with the buys. Of course, we can look at the impact on gold. I trade mainly gold, people. I am adapting to you guys and explaining about NASDAQ and S&P 500 because I understand them both. But what I do trade every day, every single day, is gold. Why? Because it's what moves the most, okay? It's the money maker here, in my opinion.
That's awesome.
So what about you? What about you, Kevin?
So mainly S&P and NASDAQ, those are sort of my bread and butter. I like using tools like the VIX with it, volatility index. If we see it spiking higher, I know that I'm getting that nice confirmation that, okay, ES and Q, we're probably going to see some more downside. So right now, that's exactly what we're seeing.
Perfect. So let's talk about the recent downside on gold. Let's go ahead first. All right.
Crazy selling pressure off the open here.
Right, crazy selling pressure. Now we are getting closer to the resistance of the 4067s. We are having a lot of strength at the moment on this range. Now this is, as you can see, volume simmered down, but we gotta understand that right now we do have pressure moves, shipping attacks intensify with gold safe haven edge. We do have hawkish Fed expectations under Warsh. Wasn't he speaking not too long ago, Kevin? Did he say anything important that you catched, or?
He was, and he just said the same song and dance that he gave us on his first FOMC speech, and that's that not much forward guidance, not much of anything, really a whole lot of nothing, but also no changes in the Fed's independence, which is always a positive. We just had a headline come out about a minute ago. Fed Warsh says inflation expectations risks have fallen, warns against 2% violation. So he's saying that new Fed chair signals lower inflation risks and warns against breaching 2% target, shifting path from hikes towards stable/earlier cuts. That's pretty interesting right there.
Interesting. Yeah, that's very interesting. Of course, if you click on the brain icon, you're going to have the full breakdown. Well, he's going crazy right now. We'll likely have news next
but
week
he's
on
yapping.
task force. Oh, the task force again. That's an interesting one.
There we go.
Oh my goodness. Yeah.
Everybody loves
questions. Yeah.
Yeah. Let's see. I
was gonna say that somebody asked like how I started, and I wanted to just explain a little bit of how I started. Well, technicals, of course, that's where everybody begins. You start learning about the technicals, about what could, this resistance, this support, your 1, 2, 3 RR, you start adapting. But what really got me into trading is the fundamentals. Once I started understanding what actually drives the price of, for example, gold or NASDAQ or the S&P 500, that's actually what spiked the real interest in me, because I started understanding, okay, so if right now we have this comment from Trump, we have this geopolitical tensions going on, and we actually understand that it ties up to gold in this form. So once you understand that macro context, and you have the full picture in your mind, that's when you actually start loving trading, because you have a different understanding of what's going on. You feel more adapted. And this is what market is for at the end of the day, right? Market is to give you that edge on the fundamentals and tie it into your experience with technicals. We also give you the resistance and supports and the target level, but it's up to your discretion with what you have acquired with market to see what you're going to do. Right now, are you going to jump on a sell right in the middle of the resistance and the support? I don't think so. It would be better to wait for the 4090s, and then we can enter for a sell to target the 3975. So that's how you're going to start tying things up with the markets.
Beautiful.
What do you think about that, Kevin?
Yeah, I know. You're absolutely right. The whole saying of buy low, sell high. We don't want to be buying a breakout. We don't want to be buying at resistance either. We want to be buying at support. We want to be trading the range. We want to use market to our advantage and understand what's that fundamental bias and how does it line up with our technicals, right? Market is that pat on the back to say you're doing the right thing. You're looking at the right direction.
Correct. Abdul, were you the sub that did those CH webinar, like dollar domination? I believe that's going to be the other Seb. There was another Seb back in CH.
Was there?
Yeah, a long time ago, there was a Seb that did a webinar, like dollar domination and other stuff like that. And I do believe he's actually in the comments. I'm not too sure. The others. So yeah,
Seb 2.0.
Seb 2.0, bro. Yeah, it's him. It's Seb TFC. So that's he that exactly. Look at Nicholas saying no.
That's awesome. Now we have the OG in here.
Exactly, that's Toro. So there's two Sebs. So me, Seb Market, of course, and then there's Seb Toro, which is a good friend of ours, actually. A really good guy, very knowledgeable too. As you can see, he has been commenting a lot. And he always shares value. So very, very sharp dude, I'm not gonna lie.
Wait, is Seb TFX? Is that you or is that the other Seb?
No, it's the other Seb. I've seen you get confused sometimes when you see that. Yeah.
Bro, I had no idea. I thought that was you this whole time.
I didn't want to correct you in the comments. I'll tell him one day. You know?
That's great. Oh my god, that's amazing. That is phenomenal. 4090 selling incoming. What are your thoughts on some sells on gold coming up anytime soon?
Let me see. Do we have? Oh yeah, so we do have at worst as inflation risk has come down. Let's see if anything else. As you can see, people, I'm using the extension on my trading view chart just to have everything here in one place. Now you can not only see the live news feed, but we also have the calendar, which the up next is going to be, of course, the ISM manufacturing in around 19 minutes. Let's go to live news feed. Inflation risk has come down. Yeah, so right now we are having a big push. If we want to know a little bit more about this, what I would recommend is go to market, go to the 1 hourly, and then just click on this candle right here. Once you click on that candle, we're going to start analyzing the candle to see exactly what is driving the price. So let's see if we catch anything important here. If not, this is just a routine with volume around 9:30 a.m. with nice open. So let's see. Gold short recovery and rally on Fed Chair Warsh comments. This inflation risk have fallen. Now we do have Fed Warsh highlights lower inflation risk, reducing perceived need for further hawkish tightening. As you can see, this is where we started analyzing, and this is the whole move that we've had so far. Now, the hot headlines that we have is that Fed Chair Warsh speech in focus today for traders, and Bailey says that rate cuts are not being considered at the time. So as you can see, inflation is being a little bit of pushed back by the Feds, not only by the U.S. Feds, but we do have central banks all over the board pushing inflation a little bit back. So we do have to take in notice that we do have NFP tomorrow. Very important to see how the labor market is doing, which I do believe it's going to be resilient. It's not going to have that much going on, but of course, I could be 100% mistaken. So we need to be ready for that. And just to give you that little bit of a teaser, it's a little bit of a teaser. We do have the non-farm payrolls here. If you go to non-farm payrolls, you're going to see the very, very beautiful playbook. Not only that, I'm just going to show you guys the impact on US dollar. If you know how that correlates to gold, I congratulate you. You know how that's going to affect gold. But we also have the prediction market here, which is a 45.5% chance of actually NFP coming around 100,000 to 150,000. Very important for you guys to understand. And as you can see, in the past 2 years, NFP is a data that fluctuates a lot. Okay, so we can go to minus 105,000, and then the next time we go to 64,000, and then the next time we can go to 130. So it fluctuates a lot depending on the outcome, on the minimum and max. You can expect a lot of volume and volatility and take advantage. What do you think about that, Kevin?
Dude, you're spot on, bro. I think I'm glad I brought you on today.
Thank you so much, brother. I appreciate you.
Absolutely, bro. I appreciate you taking the time to join us. You know, these streams brings a lot of value to the viewers. It shows, and you're doing a fantastic job at showing how to use markets to your advantage.
Thank you so much for that, Kevin. No, it's really my pleasure being here with you. I'm actually a fan. Personally, I'm a fan. I've watched you a long time, so it's really cool to be actually here.
Oh, that's awesome, man. That's awesome, guys. Isn't Seb doing amazing? Seb, do you want to drop your socials in here? Tell some people where to find you.
Yeah, why not? Let's go ahead and do so. We'll just throw them up in the comments.
Yeah, if you want to throw them in the comments, absolutely. Looking like markets, ES and NQ are trying to turn around here a little bit. I'd love to see it turn around back to the upside. Unfortunately, already running into a tad bit of weakness. We have about 15 seconds for the 15-minute time frame to close. So I'd want to see some strong follow through. It's going to be 9:45. Don't think we have any economic data at 9:45. We have it at 10 today.
Correct. Let's see. I want to go to the S&P 500 too. We are getting closer to that 4090s, but let's go ahead and see the S&P 500. All right. Yeah, I mean, at the time being for the S&P 500, I would just sit tight. I wouldn't really. Yeah. I would prefer just to sit tight and wait for 10 a.m. the new hourly candle. Once we have the new hourly candle, we can understand a little bit better with both ISM manufacturing, PMI, and prices paid. Which prices paid will give us a little bit more of a understanding of inflation on the near term, so meaning short term. So let's go ahead and wait for that. But until then, people just wait for the noise and dust to settle. Don't take any trades just yet.
That's right. You guys know what we say. Nobody's standing next to you saying you have to take a trade.
Juicy.
Bro, I still can't get over that that's not you.
Exactly. No, I mean, at the end of the day, the trades that you force are going to be the trades that...
Right.
That's crazy, right? So
You know what
funny,
it is
man.
too? The trades that you force, if it's a winner or a loser, you're not learning anything. If it's especially, it's funny as it sounds, especially if it's a winner. If you force a trade and you win from it, all it's teaching you is that it's okay to force trades, and it's going to start pushing bad habits.
Exactly. Exactly.
All right, let's see, guys. Markets are trying to
Connecting,
turn around
since
here up
this
to
is my
70.
first time. Oh, I was just gonna say, since this is my first time, I'm connecting my thing to comment with you guys. 1 second, my
Yeah,
apologies.
absolutely, bro. Bro, do your thing. I'll run it a little bit here. We're killing it. This is a great stream so far, ladies and gentlemen. I'll remove your screen for a sec, throw up what I'm looking at. S&P came off of this 75.10 that I was looking for. I took a small scalp over here. I'm looking to see where we close, like Seb mentioned. And again, this is where we're strong as a community, but we're even stronger as a trading group, is that we all know what we're looking for, right? And what I'm looking for too is going to be how that hourly closes on the S&P. If it closes somewhere above this white level that I just marked out, we'll make it purple so it sticks out a bit. Mark it purple. If we close above this level, I'm going to look for that continuation. On top of that, if the economic data comes in our favor for the bulls for the S&P 500 and we close above that level, that's a double confirmation with the strong confirmation of economic data. I'm definitely going to be looking for those longs off of that rip then. So I'd be looking for something like this. Target the upside around 75.58. That would be the trade setup I'm looking for on the S&P, but we would need to see that close above this purple level. Right now we're trying. We have about 12 minutes until then. Kev, how do you take advantage of those gold sells? Good question. Let's see. So what's going on with gold right now? So
On gold,
wheezing,
yeah,
right?
we're wheezing right now. Exactly. We're at the 40.95s right now, which is for me a key level. As you can see on the left side, we have tapped that multiple times before. So we do need a little bit of force to break up. Now let me just close market so we can see a little bit more of the technicals here, right? So the 4-hourly, this is of course the new 4-hourly candle, which it has a lot of force. Now, as you can see, we're having a little bit of a battle here, a tug of war, right?
Yep.
Sellers coming in because of the 40.96 area, which is phenomenal. But again, very important to take note that in 11 minutes, we're going to have the decisive, right? When we get to this part, we do not only need the technicals, but we need them to align with the fundamentals, right? So if we want to break above the 40.96, we do need ISM manufacturing supporting this gold buys. Now, we are going to receive that ISM manufacturing in about 11 minutes. So that's going to be, for me, the decisive if we are going to have enough force to push to the upside to go to the next key level that I have marked around the 41.24s. But of course, it all depends on the economic data, the fundamentals, people.
Yep, absolutely. Absolutely. So we're just going to wait and see. Where are we at? Let's pull up, and you already have it up, the ISM manufacturing.
Yeah, I have it right here.
So 54 recent ISM manufacturing, it did spike higher on the last read. And looking at that historical data chart, it looks like, it's funny, guys, you could use charting and trends on these charts too. It's in an uptrend right now. The ISM manufacturing has been in an uptrend. So do we want to continue that move higher? We could take a look at the playbook and see if it does come out higher than expected, that would be bearish on the market. Lower than expected, bullish on the market. When I say market, I'm talking S&P and NASDAQ. I believe gold also same impacts. So
Gold also, yeah, correct.
Yeah, that'll really be our make or break right there, and our tell of bullish or bearish going forward. We have about 9 minutes until then, guys. Smash that like button if you haven't already. Our goal is always 50 likes per stream. You guys are phenomenal. If you're here on Twitter, make sure you hit that heart, hit that repost button, share it with some friends. We do this live every single day for you guys. And don't forget, Friday is observance of July 4th, 4th of July. So New York session is closed. There will not be a market in the morning stream. Tomorrow, same deal, no market in the morning stream, but there will be the NFP stream. So I'm going to throw that link in the comments one more time for you guys.
Insane.
So make sure you guys click that and join. Yeah.
I do want to go ahead and just let you guys know something very important. Now, we always show the playbook, right? But let's understand the playbook. So what's the difference between a very bearish and a bearish? Now, this is the max. What is the minimum and max? It's the max expectation of where that economic event can come out. Now, if it exceeds the max, if it comes higher, meaning 85 or higher, then we're going to see a lot of volume and volatility in the markets. That's the reason why. It's very important for you to know. Same thing with the minimum. If it comes below the minimum or at the minimum, expect a lot of volume and volatility. And I would suggest, if you want to, get on the lower lot trade, jump on the trend. You know, it's going to be short-lived. You can do a 5-10 minute trade, a quick scalp, make some profits, and leave it at there, you know?
That's it. That's it. That is it. Great. Well said, Seb.
Thank you so much, Kevin.
For sure. VIX continuing lower. We just had a headline. I believe we had something come out from Warsh again. Warsh says forward guidance policy inappropriate for current moment. Yeah, we don't need to have any forward guidance. It's not like earnings reports for every large cap company has earnings guidance every quarter. So why would the whole entire US economy need one, right?
Right. Exactly.
What else? Balance sheet borders on fiscal policy, wants interest rate policy to be the key policy tool, which it already is. We see ES and NQ, S&P, and NASDAQ are moving higher from those levels. That's great. Definitely looking like that hourly wants to close above that purple level I marked out and showed you guys before. That is over here on the S&P. So we were looking for longs below that level. We have 6 minutes left. I would hope to see this close, small body. Next candle comes out. We get the data. It wicks us lower first, but then continues us higher in trend. I do want to see that continuation. We have been getting bull moves in the New York session lately, so we just want to be trading with the trend. We don't want to be the people that go, oh, well, this has to be the top. Let me short this. You know, trade with the trend.
Don't be that person, please.
Don't be that
Just
guy.
Don't.
Nobody wants to be that guy, right?
Nobody wants to be that guy.
I saw a quote. I saw something on Instagram, and I'll probably make one myself, but it says there's two sayings that contradict each other. The early bird gets the worm, which means sort of the first person there wins, but then the second mouse gets the cheese. In trading, we want to be the second mouse. We do not want to be the early bird or the first mouse that gets killed by the trap, and then the next mouse eats our cheese. We want to let that trap come through, snap a bunch of trader mouses' necks, and then we take our profits from them. We be patient. Wait for that second entry. Markets will always, if we're reversing, they'll always give you that opportunity off of your level versus trying to force things that are not following through.
Exactly. I completely agree with you, Kevin. I mean, if you're going to try to be that person, you're going to have a hard time. Okay. I do promise you that. Because there's no point. It's better to play with the trend than to actually try to create a new trend of like, this is going to be the bottom. No, like there's no reason for that. Just go with the trend until you are proven otherwise, and then adapt.
Right. Bro, I say the same thing. Trend is your friend until proven otherwise. You know, if markets are moving higher and we're getting a pullback, don't assume that pullback is a reversal. It's a reversal when we're able to break structure again back in the opposite direction.
Exactly. And then you can always go back to market and just see what are the fundamentals driving the price right now. And then what could flip it? We have the flip watch, which is amazing, right? So let's go ahead and
let's check out that flip watch real quick.
Yeah, so look at the flip. Yeah, of course. So let's go ahead. So we're not going to give forward guidance. We did understand this. This is going to be like I do believe Emory said that this is bad because of what the market is used to, right? Especially with Powell and all the forward guidance. But again, what Emory said and super important is if they don't want to give forward guidance, do they really know what is going on? Do they really know what to do, right? Because if not, they can give you a little hints here and there. But I mean, if they're a little bit on the flip side, inflation is coming down, we got to see labor market. They don't want to give you that much guidance. What we as traders need to do now is adapt and see the economic events of what's going on, see how the geopolitical tensions in the Middle East is going, and as well, just check out market, which is going to give you everything, right? So right now, what is supporting the bias of the bulls that you're trying to get on a bias right now, right? We do have U.S. Iran ceasefire and Doha talks ease Hormuz tail risk. We do have Supreme Court protects Fed independence, which I believe it was yesterday. I saw that headline that they blocked Donald Trump from
firing Cook.
From Lisa Cook. Yeah, Lisa Cook, exactly. That was yesterday. Let's see if we do have anything else here. Now on the counter, we do have Fed's hammock signal possible rate hikes as inflation stays up. Now we are seeing a little bit of a shift in U.S. Fed members. Now some want to hike, some want to cut rates. They're a little bit on the 50-50 side. So again, I do believe that's why they don't want to give forward guidance just yet. And they are waiting, like us traders, for the actual high impact economic events. Now, let me go back to that calendar because in 3 minutes, we are going to have that, the release. So there is a market AI prediction here, but which is it's stating that it for gold in this case, it will come above the forecast and it's going to be bearish for gold. Now that's the AI prediction that we have on market. Let's go ahead and test that, right? Let's see how well it performs.
Yeah.
Now,
we'll see.
Another important thing, it's the prediction market, Kevin. We do have the 47.5% of coming down at 52.9. Now, if that happens, that's actually going to be very bullish for gold, right? It will be coming below the minimum as well. So it would come with a lot of volume and volatility to the markets. But again, we need to see what's happening, right? And we got a minute and a half.
Yep, guys, it's coming out. Guys, let us know in the comments. What do you think? Is it coming out higher than expected, lower than expected, or is it going to come within range? I really hope it doesn't come within range because then we're just going to lead to a whole lot more chop. But we'll see. Hopefully it gives us some insight. If it doesn't, we're just going to have to sit on our hands and be that much more patient.
Exactly.
Let's see. We'll see. And NFP, man, don't go wasting all your capital today. We got NFP tomorrow.
NFP is the big one.
Yep. Last non-farm payroll gave us a beautiful trend. So we'll see if it wants to do the same thing again.
I completely agree with you. And that last NFP was beautiful.
It was so nice.
Beautiful. And I think I was saying it last month. Like, I don't think we're getting like a clean NFP like this anymore.
Yeah, right.
Well,
you know what? It's always about markets rotating, markets shifting and positioning and sizing and everything. So my whole take on the market becomes the market is sort of like the weather, right? And we're never just going to get always sunny weather. We're never going to get always trending markets from the same data releases. But like Imre was mentioning earlier, you have to know which data releases are the most important right now. And non-farm payroll, unemployment, every institution, every major market maker, even if they're not day traders, they're just institutions. They're looking for this event. They're looking for this data. Here it is coming out right now. See how it comes out. Let's see.
Well, we do have it at 53.3 as a manufacturer. And prices paid came out around 73.
Okay, a little lower than expected.
A little lower than expected. So the prediction market that we have was actually correct, telling us that it was going to come around 52.9. So I was very close. I was going to the charts real quick.
Come on, give us a pullback. I'm looking for S&P to pull back to 75.27. I'll show you guys real quick here. Would like to see a pullback towards 75.27. Take those longs targeting the next area of resistance. If we don't get that, then it's just sort of a matter of being patient for the next valid entry, which the next valid entry, if I'm looking at our volume profile right here, It's going to be once we could scale above 75.39 to 75.42. We break that, I would look for a break and retest of that zone. If we don't break that, I'll look to see if we can hold it and come back to this area near VWAP to hold.
Exactly.
So we shall see. Gold also trying to continue higher. Now that data that came out and how it came out is more bullish on our equities.
Yep, correct.
You could even see how
for gold, we are having a little bit of a tug of war right now in Goldilocks.
Here we go.
What I would recommend in this scenario, of course, I want to trade here.
What'd you say, Seb? Full port?
Full port right now.
Full port everything, guys. Put the house on it.
Put the house on it, man.
GC holding Seb TFX. GC holding about 4,100 is important, especially with Warsh talking down inflation expectations. Absolutely. Damn, Seb, how are you here and commenting there at the same time? That was my first thought before, by the way.
Right, that was the first thing that came to your mind when
Like
you saw that.
You were talking, the other Seb commented something long enough that it's like, how do you talk and type a completely separate sentence? That was great.
That's hilarious, man. We have it all under control. Seb on the live and the Seb on comments. Right now on gold, as Seb said, literally, we are holding right now close to the 4,100s, and this is going to be a make or break decision. Now, of course, he was talking more about futures, but I'm going to talk about CFTs. So, because that's what I trade. But right now, this is the no trade zone, people, for me, right? If you trade here, then I don't know what you're doing. So what we need to do is wait until we break this structure and we start trading above the 4,100s, or wait for actually for a little retest. Since ISM manufacturing is not that crazy, as you may know, we do have non-farm payrolls tomorrow, so the market is going to wait a little bit for tomorrow's data and not react that much on today's data. But as you can see, we are a little bit slow. I wouldn't, in this box, I'm not going to trade. I would trade above this box around the 41.10s, and then I will start targeting around the 41.30s. If not, a pullback to the 40.50s or the 40.60s would be ideal, and then we can start getting on those longs again, right? But very important, people, today is a weird day. It's a prior day to NFP. So if you are going to trade, go on that lower lot, lot on your trade, and make them quick. Don't be holding until tomorrow and then be guessing with NFP, right? Oh, it's gonna make my trade go higher. No, buddy, you don't know that. So it's very important to have everything under control as traders.
Awesome, man. Awesome. Great breakdown. Again, appreciate you for being here today. Great stream. Guys, you have been a phenomenal audience as well. Keep running that like button up. Let's try to hit 70 likes today here on YouTube. Got a big audience. Absolutely love to see it. And our goal with these Market in the Morning episodes, guys, is to grow our audience so we can keep doing this. Keep doing these live streams for free for you guys. Give you guys an advantage in the market versus having to pay 50,000 subscriptions. A subscription for this, a subscription for that, a subscription to a community. Nah, you got a free community right here, Market in the Morning.
Yeah, I mean, if you guys want to like be up to date too, we do have a Discord chat. On the Discord, we do send all of the updates. Let me go.
Great call.
Send you that.
I got you.
Share that link with you. Oh, you got it, Kevin? Beautiful.
Yes, sir. Great reminder. Thank you, sir.
Yeah, since they want to have a little team here, we're here everywhere.
Yeah. You know? The market support staff.
Exactly, man. Exactly.
Absolutely. Yo, you got it, Tony, for sure. Guys, make sure you like, subscribe, join us every day, Monday through Friday, except for this week, because tomorrow, NFP, we're having a special webinar, and I'll make sure to post the link to that in the comments one more time for you guys to save your seats. That will be with Jeev and Imre. So it's going to be really, really, really great stream tomorrow, guys. And then Friday is the acknowledgement sort of the July 4th, which falls on Saturday. So Friday becomes the bank holiday for that. Exactly. S&P looking ready to squeeze here.
Yeah, that's what I'm looking at right now too. Let me go to the actual chart just to see everything going on.
And I wanted to take it before the squeeze, but it just did not give us that good pullback entry. So am I one to buy the highs? Absolutely not.
That's beautiful. I mean, still, it was literally what you were looking for.
Yep.
You know,
Right off of the 75.10.
Exactly. And this happens to a lot of people. I mean, you can have the right idea, the right direction, especially if you're using market, right? But sometimes the moves happen a little bit too quick. And don't beat yourself up on that. The market is always going to be here. So, again, if you didn't take this buy, which Kevin gave a phenomenal buy, if I'm being honest.
Yeah, right.
Then, yeah, dude, phenomenal. I would recommend to wait right now. Do not enter another trade. Just wait until a little pullback so we can start having a better market structure to continue, or just wait for tomorrow for the live stream, which is going to be value packed, of course. Now, that's going to be for two people. It's going to be Imri and Jeev as the host, and I do promise you, they are going to share value. Like, whew,
yeah, it's going to be a great stream. Absolutely. Guys, I'm waiting for this pullback on S&P. Do want this entry still. Next target 75.60 to the upside. So it's still another 15 points from where we are right now. S&P is not done moving higher, in my opinion. NASDAQ, same situation. Now, NASDAQ, we're seeing a bit of divergence. NASDAQ we're at 30,300. I want to see it come back to 30,570. So we'll see if it has the momentum.
Right.
If not, we just wait.
If not, just wait. Exactly.
Let's see. Now, I'm a big fan of equities, so let's take a quick look at what our equities are doing. Microsoft is moving higher off of the support zone. NVIDIA trying to hold above 194. It's at 195.60 right now. If we clear 196, again, this gives me strong confidence. We're trying to move higher. Google also holding up. Apple holding up. Meta holding up. Only thing that's lacking at the moment is SpaceX, but it hasn't had that big of a pull on markets. So what I'm going to do is I'm going to put Amazon back in this corner, because Amazon is a top 5 holding of the S&P and NASDAQ. So when it comes to general direction, if we can get most of our equities in that same direction, that helps support our bias.
Completely agree with you.
Awesome. Wow. ES is flying, bro. It said
you want
to pull back? Yeah, right. Pull back on these.
Exactly, bro. That's what I was thinking right now. That's why I said when I was looking at the S&P 500, I mean, a pullback would be ideal for the entry, but I mean, if we touch those 79.45s and we bounce off of there, then yeah, I would completely agree, lower lot. But I mean, don't wait for it to come back to the 74.70s, you know? I mean, that's unreasonable, especially with NFP tomorrow.
Yep, exactly. So right now, guys, what I'm looking for on the S&P, I'm looking for us to close higher here on the 5-minute. We can close higher. I will look for this low volume imbalance around 75.40 to 75.39 to be entry long. And again, we're just looking to target our ways higher. Not looking for a huge extension move. Just looking to trade the range markets have already been in. Need NASDAQ, though, above 30,300. That would be very ideal for this continuation play.
Yeah, actually, it would be phenomenal. Actually, we just need it above the 30,300s, and then we can start targeting the 3,600s very easily, bro.
Yeah. Oh, yeah. So let's see. Wait and see. VIX moving lower. Again, that's our confirmation of this trend right now. VIX moving lower. New low of day on VIX. New high of day on ES. I want to buy the dip somewhere. Looking for 75.40, 75.42 to be that dip buying opportunity. Stop loss on that would probably have to be near 75.38. Look at this momentum. This might be just a clean move up. We know the economic data was in our favor for the buys. What are you looking at, Seb? What do you got? What's cooking?
Right now, I'm looking at gold, just seeing how it really just breaks down. We are having a little bit of the area here that I planned it out before everything. In this scenario, I would start waiting for specific key times. It could be the 15 or the 30-minute candle. closures above this or closures below the zone, and then I can start having a little bit of more conviction in the technical side that we are going to have that pullback to the 4060s, 4050s, and then we can continue with the longs. Of course, if we do, I just want to tell everybody, if we start going down to the 4060s, 4050s, expect us to range until tomorrow. It wouldn't be out of the ordinary after the economic event that we just had. So we would be doing this on this fashion until NFP, maybe even go a little bit higher and then come back down, right? But that's going to be like usually what the markets do before a high impact event like NFP or CPI. We start ranging. And there's not going to be enough volume or volatility to break above the range. So that's very, very important to have in your mind. Of course, I can be wrong. And if we start breaking above around 1 p.m. this afternoon, then you can start targeting a little bit of, you can go into a buy and start targeting the 4124s, 4150s. But again, low probability that will happen. So have that in your mind.
Awesome, man. Yo, Seb, I love having you on, bro. Anytime you want to join, please feel free.
Thank you so much, bro. No, it's really my pleasure. It's really fun being here with you guys, just breaking down what I'm seeing to see if anybody grabs something valuable from it. So yeah, thank you for having me, man.
Absolutely, guys. It is almost a quarter after 10. Markets have just been, they had one bearish candle off the New York Open on the S&P 500. Since then, we have reversed. So looking for longs down here. I did take a small scalp, could have held, but I'm not a big fan into holding, knowing that we have economic data coming up, right? We don't want to be the ones to say, oh, I know what markets are doing, because that's bad psychology, right? I own the markets. I know what markets are doing. That's horrible psychology. You're going to end up sizing up, taking too big of a loss than you should. Things will start to snowball against you.
My pleasure, my pleasure. Seb squared in the comments, bro. This guy is, yeah. And then we got another one. Thanks, Seb. I guess that wasn't me because I was talking at the time. And then Abdullah, my brother. Thank you. I've known Abdul from a long, long time from CH, but he knows his stuff. I will tell you that. Thank you, Blaze Road. Thank you. It's our pleasure helping you today. I mean, Market in the Morning, Monday to Friday, every morning with Kev. I'm just a special guest here, but this guy's the GOAT, bro. I'm telling you.
Bro, it's a team of goats, man. Team of killers. Just like Nil says, man. Every one of us is super hungry. Every one of us is super motivated to bring you guys the best information, actionable insights, and proper understanding of what markets are doing. That's how you can stay ahead of markets. It's how you stay on the right side of the trend. You could have bought anywhere. If we're looking at the S&P 500 today right here, guys, you could have bought anywhere and had profits if you had just waited 10 minutes. Nice, almost 60 likes. Guys, run that up. 60 likes just hit. Let's run that to 70. 75, 60 is next upside target. I told you guys 75, 60 will be hit on the S&P, and it is coming still 8 points away. Yes, sir. Yes, sir, guys. Follow us on social media. Instagram for Market AI is it's marketai.insights. I actually have to update it here. Seb, if you want to cover something, I'm just going to make a change real quick.
Yeah, let's go for it. I just want to go ahead and say, Sunith, yeah, it's our pleasure. Like, thank you so much for joining us today. Crazy session. Now, if you think this is a crazy session, we are going to have an NFP webinar tomorrow, and that's going to go crazy. Trust me on that.
Yeah.
But now, last one, Marie Ringaro. Kev is the bro. Kev is the GOAT, man. You already know. This guy is really the GOAT. No, now that I wanted just to focus a little bit of the people commenting, we're gonna go ahead and again, people, if you just joined and want to know why I'm looking at gold and then why Kev is looking at NQ and the S&P 500 is because he trades those personally, and I trade gold personally. Now, of course, we can both adapt and give breakdowns on the other assets, but since I'm taking over right now, I'm gonna talk a little bit about gold. So on gold, we are having also on the higher time frame. You can see that we are on this kind of like range, right? Let me just take out market here so we can start looking at the technicals. So this would be the range from the 4,000s to the 4,100s, which is a big range. But when we have big range like this, we can take advantage and we can trade them. So Right now, this that I have here, I'm gonna mark it as red. Why red? Because this is my no trading zone. So what happened here? We had ISM manufacturing around 15 minutes ago, and it came below the forecast, which actually supports buys on gold. But we didn't have that much action, which of course it's understandable since it's ISM manufacturing PMI. It doesn't matter that it's a high impact event. It is on healthy figures above the 50 grade grade point. So let's go ahead and just check what we can wait for. Now, what I told you guys to do is either we can start waiting for a break below the 40.85s. Now, I wouldn't recommend you guys to sell here, to not sell here. What we're going to do is wait for a repositioning, and then we would wait for the buys. Of course, as traders, we do need to we do need to pay attention if we are respecting this zone, which is going to be for me the 40.50s and the 40.57s. If we start respecting this zone where we do have a little bit of noise and reaction towards the left, we start getting on those positions to the buy side. Now, where is going to be the target? The target is literally going to be this until 350 pips to the upside. The stop loss, I would put it below here, around this, below this buddies of the candles. And we're going to target here. Why? Because I don't believe we're going to break above this today. We might tomorrow with NFP, depending on the outcome, but today, volume and volatility is going to start simmering down. Now, if you have a clean way to catch this buy, you start seeing that around 1 p.m. Eastern time, we get to the 40.55s and we start respecting it. Then we're probably, like I explained prior, we're going to start ranging here, getting a low volume and volatility, well, low lot, I apologize, and then just continue on this range. Because again, we do have NFP people tomorrow, which is a high impact event. The Feds are watching closely on the labor market. We do have inflation coming down. As you can see, we did have which I explained a little bit to Kev too, that today was not only going to be in focus the ISM manufacturing PMI, which is a key input for the central bank rate decision, but we're going to look at a medium impact as well, which is going to be the ISM manufacturing prices paid. Why? Because it feeds Fed views on near-term inflation. So on the short-term side of things, it does gives the Fed a better outlook on inflation, which is in focus right now. Now tomorrow, on the other hand, the labor market is in focus. So we're going to have to look at that. And because of literally NFP, non-farm payrolls being tomorrow, I do not believe that we're going to have that much of a force today. Now, if we do, and I'm wrong, then this is what I'm going to look for. I'm going to look for a pullback to the 40.50s along to the 40.95s. And if we start breaking above the 41.10s, which again, I don't believe we're going to do, I wouldn't really want to buy there either. I would start looking for a reaction to the 41.20s and there maybe take a sell. Because again, since I do know that NFP is going to come tomorrow, the probabilities of us going up higher and higher are pretty low at the moment until we actually have the high impact event coming out. So that's what I'm seeing on gold. I wanted to give you guys a little of a breakdown. But yes, again, welcome to PJ's world. We take it level by level. I mean, if we start respecting here, we're going to take it to the next level. If we break above here, this is the next level that we're going to take advantage of. Again, but only because of NFP being tomorrow. What do you think about that, Kevin? I think you're muted, Kevin. I apologize.
I am muted, Seb, and you better not apologize. I apologize. Absolutely. Beautiful breakdown. Completely agree. Markets, in my opinion, I think we're going to continue to chop higher on the S&P and NASDAQ. Gold might also continue to chop higher. Gold, I can't believe the move gold had from 40.20 to 4,100 today. And same on XAU USD. Next area of interest I would be keeping an eye on is going to be on XAU USD 41.35. On GC, it's 41.52. So we slowly chop higher. We know directional bias right now is currently bullish on gold short term, but we do want to keep an eye on the dollar as well. This purple level down here, this is one that Nalab called out last week during one of our Market in the Morning episodes. And look at how well it's held. It held on Friday, held on Monday, Tuesday, and we're coming right back towards it if the dollar continues lower. So I would think gold is going to run out of steam once the dollar starts hitting this wall right here.
I agree. Exactly. I was just seeing dollar right now too, which is supporting the gold buys at the moment. Something very important that Seb said: war headlines plus Trump headlines fuel the squeeze. Very, very important. Also, I want to give a shout out to welcome to Pijush because he's literally he caught the message. I mean, he's telling everybody that keep your expectations low till NFP. You won't be disappointed. And again, people, we do have that NFP webinar tomorrow for free with 2 professional traders. So I do suggest you to sign up because there's going to be a big money opportunity there. All right.
Yeah, that's going to be sick.
Now let's go ahead and see. I'm going to go back to. If we click on this, we do have anything else? Some manufacturings. Now, don't forget, people, that market is an all-around platform. If I don't know if you just saw me, I just click on a candle and it literally gives you the breakdown of what is happening. Now, I do love what you said, Kevin. Look at this beautiful, beautiful push, right? From 9 a.m., the new 4-hourly candle to right now. The resistance that we have is to the 41.13, which coincidentally, it does align with my key level around the 41.24s. So this is also supporting my my bias right now, the resistance to the 41.15s. Once we start getting here to the 41.15s, we can start looking if there is exhaustion by buyers and they want to go price wants to go back to the range. Again, some sales there wouldn't be out of the ordinary. Plus we have if you start looking to the left, exactly on June 26th on Wednesday, we did have some reactions that are right there in the 15th. If we go to the 4-hourly, go a little bit more back, you can see the same thing happened multiple times. 1, 2, 3 on little candles. So it's going to be, I think it is a great point to look for any type of little lower lots, high risk, high probability sells. But again, that's up to your discretion. And what I'm personally doing is waiting for tomorrow. Tomorrow's the big fireworks for me, all right? That's the big day.
Smart man. Be aware of that. Today's not the only day you trade, right? Be aware of what's coming up in the days to come.
Exactly.
I'd love to see a squeeze here on NASDAQ to the upside, but it's definitely struggling off of that level that I had marked out recently. That low volume shelf we have here, 30,314 to 30,338. We've been testing it multiple times here, but we have been failing to sell off from it. So what that tells me is these buyers are not giving up just yet. So I'd want to see a squeeze and a quick breakthrough and some continuation. NASDAQ, I would like to target 30,430. If you're in longs, 30,435 would be a nice price target, but we really need to get above 30,338 first. Without that, we could end up ranging right back down. S&P never gave us that pullback entry. Makes sense, just a straight up kind of day today. I think NASDAQ's going to give us that better opportunity here on the breakout and possible targets right up over here. Higher lows, just need to take out these higher highs. If we don't take out higher highs, then obviously we ain't going anywhere.
Exactly. Now, same thing on gold. We're still hovering around the 4100s right now. Again, no trace on there. I'm just waiting patiently for either the pullback, break, and then just snap back below on the range.
Awesome.
That's what I'm going to be looking for, gents.
Awesome, man. Let's see, 15-minute time frame, 30-minute time frame. Seb, are you a big fan of looking at different time frame analysis when it comes to taking your trades?
Yeah, usually when I'm just waiting for the trade, I'm in the 30-minute or the 15-minute. To look for entries, I'm in the 1-minute. And then just to look at my actual trade, I'm in the 5-minute. That's what I do.
Beautiful. Good. Good.
How about you, man?
Yeah, same thing, right? Entry-wise, I'm looking on the 5, the 15, but when it comes to finding those key levels, finding those high probability zones, definitely looking for 30-minute and higher, 30 hourly, 4-hour, and daily.
Exactly. It's just to see where price is reacting, and then you can have a better understanding of price where it might react in the future. So it's better just to have everything under control as traders, because anything can happen,
Yeah,
anything can happen.
absolutely. Anything can happen at any time when it comes to these markets. So you want to be prepared. You want to know what your risk is per trade. You want to know your analysis, your bias. That's where market comes in and gives you that confidence on the bias that you're choosing and looking at. Very strong. VIX continuing lower over here, which is great. Should help the S&P and NASDAQ continue higher. NASDAQ really running into a wall versus the S&P that's sort of been cruising up higher today. So I'd like to see NASDAQ have some follow through to bring the ES higher as well.
I agree. Completely agree. Now on oil, then we can go ahead and analyze a little bit about oil, which is correlated right now to inflation. We are on pre-war prices. Now, as you can see, this is where it started spiking up and it went crazy. That's when this war in the Middle East begun. Right now, we are hovering around the 68 to 70 price handle. So this is pre-war prices. So again, this is one of the reasons why a lot of Fed members are actually shifting from Fed rate hikes to cuts again. And that's why they're focusing more on labor market. Specifically, not only because of this, but this is one of the things that lets you know what is going on, especially with the Middle East and geopolitical tensions, right?
Yep. Very nice.
Anything else on the live news feed? I mean, what was the last thing buddy Kevin Warsh said? Dude, he has the same name, huh?
Yeah, he's a copycat, bro. They market in the morning and they were like, yo, we need somebody named Kevin.
Right. Oh my, bro.
He'll never be the original.
Yeah, no, he can't. He's not even on your toes, bro. I mean, you needed to be the Fed chair, bro. What do you mean?
Yeah, right. There we go, guys. We'll get a campaign going.
Let's
bring market to the Fed. Your new Fed chairman, Kevin Dubrisky, will mess it up.
Like that,
you get an interest rate hike. You get an interest rate hike.
You do it. Oh, wait.
Yo,
Dude,
ES.
right now I'm just looking. Ooh, ES. Let me see what's happening with ES.
Back. It's been just like chopping around, man. It's really not giving us anything clear. NASDAQ rejecting that level. ES struggling. Everything's
gold struggling too. It's in my no trade zone.
Yeah, I think gold does, in my opinion, have the ability to move a little bit higher.
It does.
Be very careful.
Yeah.
Already very extended in this move when it comes to gold. You look at something I like to do too is looking at the daily time frame and asking myself, right, is it realistic that we move another 20 points from here, 50 points from here, 100 points from here? Or does our daily time frame look like it's already a full bar and we might have already had that extended move? Right now on gold, in my opinion, I think it possibly has that ability. And I think what we might be seeing right now is markets sort of preparing for non-farm payroll. Non-farm payroll comes out, and then boom, all the gains from the past few days right off the map, and we get a big bear trend yet again. That's what happened on our last non-farm payroll. NFP right here. We were bullish the day prior, and then bang, right to the downside.
Completely agree.
Nas struggling, still looking like it wants to continue. Equities. Microsoft trying to pull back. Apple near new high of day. Amazon near new high of day. I would not short this market, that's for sure.
Yeah.
Yeah, very extended.
That's for sure. Especially right now after the we had a sales going on for a bit too.
Okay? Yeah.
So if right now it's the time to adapt and go to the buys, then so be it. But we already squeezed those sells.
Here we go, ES. Come on now. Just jump off a cliff right here real quick. Stop out all these people that have been chasing longs for the past 25 minutes, and then give me my entry point right off that 75.40, 75.42. A big seller coming in here at the 75.47, so I would expect a little bit more of a move to the downside from here. Does it mean I'm taking it short? No. It just means I'm expecting that little move to occur. And it is.
And it is.
Let's go ES. Gold also trying to continue slowly chop its way higher. You got to be careful when you take longs on extension plays or continuation plays like this, that you know where your stop loss is and you're not screwing yourself in a sense that, okay, I'll go long up here, but my stop loss has to be way down here and I'm barely shooting for a 1-to-1. So what's your go-to risk to reward? What's your usual risk to reward ratio on your trades?
Yeah, so I aim for a 1 to 3 or R, but I usually close around 1 to 2.7, if I'm being honest,
Nice.
around there. The reason why is because if it's very logical, if you make one win, you can have around 3 losses to go back to 0, right? That's why it's a 1 to 3. So you have 3 chances to mess up to go back to where you were, technically. Now, doing a 1 to 2 RR, it's like a 50-50. You're gambling, buddy, all right? Like, you cannot be doing that. If you cannot hold your trades for the 1 to 3 RR, then that's something that you need to work on the psychology part of yourself, because it is stressful seeing price like hover in like in $300 in profit, right? But you are actually looking for that $700 in profit. So it's better if you already did your analysis, just close that, close your chart. If you did a very good analysis, right? If not, trade manage, try to work out with your psychology side of things. But again, 1 to 3 RR is going to be the sweet spot, okay? The sweet spot. And what about you, Kevin? Do you think do you agree?
Yeah, 100% agreed. You know, if you could shoot for that 3-to-1, and what's great with it too is it gives you that opportunity to take a losing trade, possibly take 2 losing trades, but not be so psychologically thrown off that, oh my God, I took a loss, I got to make it back. Like, you know that your next winning trade is going to compensate for that loss.
Yeah, exactly. We got Sep Toro saying 4150s to the 4200s on GC, meaning futures of gold overnight. It's not a financial advice, people. It's not financial advice. Be careful there.
Wait, you guys don't find your financial advisors in YouTube comment sections of Market in the Morning?
Right? That's what I'm saying. Don't you?
Who wouldn't?
Sep Square going at it, man.
Sep Square. Bro, that's so funny, man. I can't believe that.
Yeah, he wrote it a little bit ago. It's hilarious when he says that.
Yeah, no, I know. No, I just mean in general that I thought that was you this whole time.
Dude, at the beginning, you were like, how is he explaining and typing at the same time?
Does I have 2 brains or something? How can you have 2 separate conversations?
Jokes,
What's your YouTube then? Do you comment in here, or has it just been?
Yeah.
Okay.
I usually do comment, but it's like my burner account, all right? My burner account. You can't be telling people my burner account like that.
Oh, jeez.
No, but I'm gonna start using my the actual SEP Market Edge account, so you can see me there.
Awesome.
Some shadow boxing. Yo, who is this guy? How do you know a shadow box? Yo, whoa. Yo, okay, so people, if you gold right now, we are starting to break above the 41.10, so exactly what I was waiting for. Now in that scenario, what I do want to wait for is the reaction to the 41.24s. If we do have the strength to go there with buys, now we have to just wait. I do believe we're gonna get there really quickly though. So again, what I was waiting initially was for here to do a little spike and come back down. Now, if it gets invalidated and we actually break the 41.24s, people just sit it tight, wait for the noise and dust to settle, and reattack tomorrow, because we are going to start going to we could actually start reacting either to the 4120s, if not the 4140s at most. And then we're going to start seeing some reactions there. But very important that since NFP is tomorrow, we did have this huge surge since today, 6 in the morning, right? Boom, until now, it's been around 1,200 pips. So don't keep on buying. We are going to start heading towards um, a little bit of a resistance area soon where nobody knows. Okay, that's the thing. We have to adapt. So once we get to that place, we're going to start seeing either the 4124s or the 4140s as per my quick analysis that I did. But if we go to the 4150s, don't call me out. I could be mistaken. But of course, first thing that I said is the snapback, right? We're going to get to here and then we're going to start coming back down because of the experiences that I've had with NFP being the next day.
Awesome.
So let's see what happens. Now it's just patience time. Patience.
That's right. Man, S&P came about 3 ticks away from entry. Oh no. It's going to say, I'll see you later. You wish. You would have thought. You should have moved it up. We have fair value gap. So what I look for, I'm a big order flow trader. I like volume analysis, very helpful. We got a fair value gap lining up with the low volume shelf. So fair value gaps, like Imre was mentioning, I love this group that we have here with market. We all have practically the same analysis. We read charts the same, shows the consistency and the ability to build off that foundation. Fair value gaps are areas where it should be low volume, right? So if you get a fair value gap like over here, there's no low volume shelf. There's no point in marking it out. If you could get a fair value gap lining up with a low volume shelf, then yes, that's something that's going to show a bit more significance. Now, could I have moved this here for my entry at 75, 43, 25? Sure. I was really looking for a dip into the actual low volume shelf itself, not just the fair value gap. We did not get that. And unfortunately, it does look like markets are going to reverse off of here. But we'll see. I'm not jumping and I'm definitely not going long up here. That would be silly. So I'm waiting. If it does pull back and give me an entry, great. If it doesn't, I'll look for a re-entry, right? Markets are going to present more opportunities. We take out this high. I can then, guess what I can do? I could use this recent low as my stop loss and look for higher lows and higher highs to form. So either way, trading the trend.
Exactly.
Amazon's flying right now. Microsoft's popping. Google's popping. A lot of strength in equities here. Seb typing at the speed of light over here, guys.
I just wanted to tell everybody.
Yeah.
Very important. Now, of course, we are going to have that NFP webinar, but we're going to do a lot of different things for NFP. So not only the webinar, which is going to be the live webinar, we're going to have a video as well, YouTube video. We're going to have on socials. We're going to update everybody on socials, carousels as well. So a slideshow so you guys could understand how actually to trade NFP tomorrow. So don't forget to follow us on socials, not only here on YouTube, follow us on Trading with Kev on Instagram. He's uploading bangers after bangers. Of course, market.insights. That's going to be our main Instagram at the moment. On X, Market AI. So we're always sharing value. If you just want to go ahead and follow us there, you won't regret it. I promise you that.
That's right. 100%. S&P continuing higher. NASDAQ, again, that divergence showing. It's got a lot more weakness here than the S&P. Gold pulling back, very choppy consolidation here. No trade zone, like Seb mentioned. What's great too, with being able to do your pre-market analysis, marking out your levels, having levels ahead of market's movements, is that when we're trading in between zones and levels, that's a no trade zone. You are not to take any trades at that point.
Exactly. No trade zone at all.
S&P, do you think you could pull back just like one more time before we break new high of day? That would be stupendous.
Right? I mean, it would really be phenomenal.
Markets can't hear us and don't do what we want them to do. That's why we're here to react to them.
Exactly. And if we start breaking above here, people, I mean, Kevin was right all along. That's the only thing I'm gonna tell you guys. I mean, you should have entered that trade when he told you guys to.
Bro, those lows were clean.
Yeah, right. I was seeing with Embrace too. You were calling that out very, very well. Like an hour and a half ago. It was phenomenal.
Thank you, sir. Thank you. Team effort, man. Team effort. All about confidence and having your edge in the markets.
Exactly.
You cannot trade without an edge.
We got a comment saying, Kev asking the market politely.
Yeah, well, sometimes if you say please,
right,
the market will say thank you. And then
there is a saying though, the market is listening to you, all right? It's always listening. So
institutions have they have an on-demand button for market in the morning. So this is like their go-to show.
Exactly. Also, do you guys know that we do have market in the morning, market TV inside? Everybody know that too. We not only have this, you can look at our previous YouTube videos, which are all value based, but we do have Yahoo Finance, Reuters Live as well. This is all inside of market, so you can have everything in one place.
Awesome. And then you could even use market while the stream plays.
Yeah, exactly. Quick we got a non-trading question. You can answer it. Of course, like it's gonna be USA, buddy. I mean, do you think Bosnia's gonna win? It's like really though, because they're playing. USA is playing really, really well. I like soccer a lot. So I was even watching the World Cup yesterday. My home country was playing. We lost, but it is what it is. Back to trading, gents. Back to trading.
Awesome, man. Awesome. Come on, ES. Let's get that drop going. NASDAQ showing some weakness here. VIX consolidating a little bit, but weighted index, which is our chart that shows Apple, Google, Microsoft, NVIDIA, and Meta rolled into one, is still showing significant strength.
Beautiful. And like I told you guys, like this is exactly what I was waiting for on gold. A little bit of a push here, not until the 41.24s, a little bit earlier, like we did on the 41.15s, which I was also calling out. Now we did have a reaction there. We are starting to go down a little bit, but the important stuff will be once we start breaking the 40.85s. That's when we're going to start looking for potential buys in the 40.55s. Why? We're going to range, people. There's not going to be enough volume or volatility unless Trump comes with something wild. Okay.
Yeah. We get a nice fun tweet.
Exactly. We get a fun tweet, and then what can you do, right? You cannot. It goes out of your control.
Yep.
But this is what we're looking for at the moment.
That's it. Hopefully these buyers stay strong. Seen some strength in equities. NVIDIA still showing some weakness, though. I sort of like this area for longs on NASDAQ here. You see right where we're at in the zone. You wicked into it a couple times, low volume area. So, you could try to take it with a light enough stop loss, light size when trading these market conditions. We know they're very range bound. But we also know that buyers had good momentum today, so we do want to be trading along with that trend. There goes ES, new high of day on the S&P 500, and yet NASDAQ still showing some weakness, so be very careful there. Yeah, NASDAQ getting ready to dump, I think. Look at that. Let's see. 20 seconds left. Yeah, it looks like it's getting ready to give us a little shot to the dark. That's why I was waiting on ES. ES, we were waiting on this zone. We did not get it yet. So we're just going to keep waiting. There's no point in risking and putting capital on the line for 40 different trades just to get yourself stopped out, and then your trade setup occurs.
Exactly.
I notice most technical breakdowns here include indicators, but are they necessary? Which indicators? I don't use any indicators. Ooh, NAS with a drop. Can it bring ES lower here? Hopefully it does. Cozy, let us know what indicators you're looking at. Piyush, what's going on? Have a great day. Kevin Seb, you guys are amazing, putting lots of effort into these live shows while other mentors are trying to rip people up. Yeah, I know. I feel like a lot of people in this industry, it's more of a sales game for them than it is an actual like market analysis and breakdown and education, really. Like education, knowledge is power. We want to give you guys that. Oh, the volume profile. Yeah. Oh, so volume profile. Okay, hold up. ES coming near our area of interest we've been waiting on. Let me see if we could set this up here. I'll let you guys know if I execute, but most likely will. Stops would be around 38, so we could take it lightly on ES because we've been waiting this long, but the selling pressure we're seeing on NASDAQ, this thing could just rip to the downside, so be very careful and patient here. But this was the area that I've been waiting on the ES for about 30 minutes now. Oh my God, it's 10:46 already. Just realized.
Whoa, we went over. That's awesome, bro.
Yeah, bro, right? Time flies when you're having fun, man, and cooking in the markets.
Exactly. Completely agree.
A lot of weakness. Ladies and gentlemen, if you have any last minute questions, please feel free to let us know. We will be wrapping up the session momentarily here. Hopefully these buys do hold this level and we can get one last banger for the day. I am in those ES longs, and if it stops out, it stops out. I do like this initial reaction. We just really need to see us start to hold here. Stop is going to be near 38, 38.75. Seb, do you have anything you want to leave us off on?
Yeah, I mean, just coming back to my entry again, like I told you guys, this is the no trade zone, and I told you guys that because of, as you can see, we're just ranging on a little part, and it's not going to be even like for like a scalp. It doesn't even make sense. What is this range? Like, well, it's a 200 pip range. I'm not going to lie to you, it's pretty big, but again, what we're trying to get here is not a 200 pip move, which I love those. And I actually have a friend of mine that he's on the team, PJ. He's telling me that. Do not get those moves that I always love, like a quick 200 pips, quick 300 pips, like easy in and out. But he's like, no, bro, hold them longer, get the 500, get the 700 pip. You have the knowledge, you have the skill, so go for it. So that's something that I'm trying to adapt as a trader. But again, the thing is, wait for this pullback, people, and then just start looking for some longs. And then again, NFP tomorrow, we have that beautiful Zoom. You're more than welcome to join us. It's free.
There we go, guys. I'll drop that link one more time for you guys to join the webinar. Let me find that. Really great
start. Yeah. Beautiful. All right, man. Austin, it's been my pleasure, man. It's first time here with you guys. It's really my pleasure helping you.
First of many, man. First of many.
Catherine, NVIDIA is weak.
Yeah, that was a great call by Catherine. NVIDIA at the moment is weaker than most of the other equities. Apple was trying to hold. Microsoft new high of day. Meta, we need to see Meta start pushing back higher. Google's trying to hold. Amazon's trying to hold. It's really NVIDIA and Apple that are showing weakness. If these two can flip, we're going to see that strong move to the upside that we're looking for. If they don't, we're going to struggle a bit more. But I'd like to see this area hold. So far, entry is in the green. And if it stops out, it stops out. We're prepared for anything when it comes to the markets.
Exactly. We are.
There we go. Microsoft new high of day. Apple trying to turn around. So is NVIDIA creating a bit of a lower wick here on the 5-minute. Amazon trying to move up. Google still also trying to move up. Google made a new high of day on that last 5-minute candle as well. So still overall bullish, right? We're trading with the trend. I want to know VIX. VIX did take a spike to the upside. I want to see VIX come back lower again here too. But overall, I'm pleased with the current reaction we're seeing to that zone. But like I said, guys, stop loss is in place. I'm not moving it to break even too quickly because that would be silly. But I do want to see this continue on the ES to 75.60 is my price target.
Agree.
Guys, make sure you hit that link. Join the webinar tomorrow. That is a wrap to market in the morning this week. Here we go, ES. Come on, get that going. Get that just a quick rally so we could end the stream on a banger. No, I'm just kidding. There it's at. Did we bottom pick?
Yeah, and you went in, you told everybody, yeah.
Yes, sir.
Beautiful,
yes, sir.
It's actually a really good entry, actually.
Yeah, that was clean. As long as we breach new high a day, it's clean.
Yep, exactly. I mean, aiming for that, the 75.16, 75.20s would be ideal,
Yep.
Ideal.
Always have two take profits. I'm a fan also of having multiple take profits, right? So if you're a trader that's trading in the direction and you buy on a pullback, your first take profit should usually be that new high of day to be taken, and then have a second take profit at that higher time frame area of interest that you're looking at. Good momentum here, man. We scale above the 75.51 right here. I think we have a nice clean run up to 75.58, 75.60. So great last minute call out here on ES. Good work, ladies and gentlemen. I will see you guys all on Monday.
It's been my pleasure. Take care, gents.
Bro, Seb, thank you so much for being here. It's been an awesome show having you.
No, it's really been my pleasure. Like, tell me whenever you want me to join, man. It's always my pleasure.
Awesome, bro. All right, later, everybody. Have a great rest of your day. ES is flying. Look at that bottom tick entry, man. Killer, bro. Killer.
Killer, man.
Killer. Dang.
Nice. Banger.
Dang.
Nice.
All right. Later, everybody. Have a great day.
Later, people. Take care.